Yeah, my dear students, I could see a few people on the live. Can you please give me one quick confirmation? A very happy morning, a very happy morning for you all, a very good morning for each and everyone. So I hope I'm clearly audible and everything is technically okay. I'm visible, my screen is visible, my audio is all fine. Can you give me one quick confirmation so that I can go ahead and start our marathon without any delay further? Yep, super. Nice, 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 nice. Thank you. Thanks a lot for your responses. Fine. So, very good morning, my dear students. I hope you guys are all doing good. I hope you guys are all perfectly fine. I do wish and hope that your preparation is going on well for your upcoming examination. So, here comes one more value addition for all of you, which is going to be in the form of this CA Inter GST marathon. And before I go into the technical discussion and all, I would like to share a few points with you, a few instructions you can take, a few important info I wanted to give. Thereafter, I will go into the conceptual discussion. So a few things which I would like to share it with you. Sir, for whom this marathon is going to be for? This marathon is going to be for those students, those who are appearing for May 2026 examination, or even it could be later attempts also. If you're planning for September 26 or Jan 27, for you also this marathon is going to become applicable. And this marathon is not just suitable only for CA inter students, even CMA inter students also can use it. Yeah, this is going to be a marathon which is going to be helpful for both CA inter students as well as CMA inter students. Both of you can comfortably take the help of this marathon, take the support of this marathon in order to clear your examination. Okay, then throughout this marathon I will be using multiple resources. All these resources where you can download it, that I will let you know first, because these resources will make this marathon complete. Without these resources you will not be able to connect the things. So what and all resources I will be using here? So as you could see here, I have in concept notes here. Our principal source, our primary source is going to be this concept notes, and this is one such concept notes which we have worked on it a lot. And if you have already attended our lectures, or normal EOB lectures or regular lectures, you might have already experienced the quality of this concept notes here. So it is going to run around hardly some 185 pages around. So we have 185 pages of the material of GST, covering everything from the study material, and also we have taken all the care to make sure that nothing has been taken out, nothing has been omitted from the study material, nothing has been missed out. We have taken all that care, and very carefully, with a lot of caution, with a lot of precision, we have drafted this material. So this is going to be our primary source, from which we are going to cover all the concepts from. And just I have one more thing to do here. I want you to supplement this concept notes with one small supplementary material. Recently we have released the supplementary material. Even I have made a video talking about the GST amendments which are applicable for May 2026. So we have hardly normal 5 pages of supplementary material which contains the amendment part for May 2026. So even somewhere around 1 hour 20 minutes of video also I have uploaded on the YouTube covering these amendments. So now don't worry, even if you haven't referred to that amendments also, you need not worry about it, because what we are trying to do is we will try to integrate that amendments as a part of our marathon. We are going to integrate all those amendments as a part of our marathon. Wherever these amendments are there, that I will try to touch on them even as a part of this marathon as well. Even if you haven't watched that amendments video also, it is fine, but I would suggest you better go through the amendments video once, and this will make even more sense. So like this, we are going to primarily use this resource, which is a concept notes, and also we are going to make use of this supplementary notes. So hardly 5 pages of supplementary material we have. Sir, where you can download this, where we can get these materials? Yes, where you can get these materials is just you have to visit our website. Link of the website has been given in the description of this video. Just visit that website, and in that website go to the free resources section. In the free resources section, go to CA Inter Paper 3B GST. There you will be able to find all the resources, concept notes you will be able to find, supplementary material you will be able to find, even this question bank you will be able to find. So all these resources are available for free for download on our platforms. So just go through the description of this video. Once you will be able to find the link to access the website. Just visit the website, go to the free resources section. There are there are plenty of resources which are waiting for you. You can download them and you can definitely use them for your preparation. Not just that, even if you want to get the hard copies of the material on the same website, even you can place the order, you can get the hard copies of the materials also get delivered to your addresses. And throughout this marathon, I will be writing, I will be scribbling multiple things here and there. I will be taking the help of the chats. See, one distinguishing feature, as you all are aware if you have attended my regular sessions or EOB sessions, I try to summarize in a very conceptual manner. I try to make use of the charts. I try to make use of some pictorial representation to make the flow of the concept very seamless. So even the same thing which I'm going to do as a part of this marathon as well. I'm going to present various complex topics in the form of some charts. I will try to give various summaries. I will scribble a lot of things. I will try to draw various diagrams. I'm going to show you all my artistic skills. So that class notes, that running notes will be there for this marathon. Even this running notes also will be uploaded because I have to finish it, right? So once I finish this marathon, even this running notes also will be uploaded on the same free resources section, which you can have the access for. So these are the important resources and where you can download them, right? And one more distinguishing feature as a part of this marathon, one thing I'm trying to assure you from my side, the most important thing which I'm going to assure you all is I'm going to give you all the conceptual clarity whatever you require. So this is complementary to your preparation. So 100% we will try to give you conceptual clarity. All the concepts I will try to make it clear through this marathon. I will try to revise basically all the concepts which are associated in your material, which are relevant for your exam. All the concepts will be thoroughly revised to the extent possible. We'll try to cover everything, and there will be certain topics which might not be suitable for revision, leaving out a few very handful topics. Remaining all we will try to do a comprehensive revision. Okay. And see, the usually what I used to do is I used to do the recording and I used to upload it on the YouTube. But this time I wanted to do it in a much more different manner. I wanted these sessions to be very interactive, where I also need your commitment from your side. So some people will be there who might have, some students might be of such a notion that, sir, if you could, I have got this feedback from the students where they say that, sir, if you could conduct a live, we will reserve our time. We'll reserve our time. Let us say, for example, on a daily basis, you are coming at 9 to 1. Let us say this time I have announced for that 9 to 1. So if you are coming live, we also will block our time, sir. We will also block our schedule, sir. 9 to 1, we'll stick our time. We'll stick to this. And it will be very much fun to watch you live. So that's why this time I'm trying this out. I do wish and hope that there will be no technical glitches. In case if you face any trouble during this live and all, if there is any technical glitch or something, you can immediately bring it to my attention. I will be having a look on a continuous basis at the chat box as well. Please let me know, because I might be in a flow when I am discussing this. So let me know in the comment section if in case if you are facing any technical glitches. I will try to resolve it immediately. And let us wish and hope for a very seamless, a very glitch-free session going forward. Okay, right. So having said that, now let me go into the conceptual discussion. Now we are jumping into the marathon related discussion. So as you could see the index here, we have a very good number of chapters which we are required to cover here. As you could see, this is what the index for GST. So we have a very good number of chapters which we are supposed to cover as a part of this marathon. Right. So people are asking me, sir, will this live recorded sessions will be available on the YouTube? Yes, it will be available. You need not worry about it. You need not worry about it. So even these live recorded sessions also will be available on the YouTube. It is not going to go anywhere. It will still be available. Even if you miss somewhat in between, you can come back and rewatch it. And will you solve questions? I might not be able to solve the questions in the marathon because this is a marathon series. I will not be solving questions here. But the key points, technical points, which they test in the questions, that I will try to link it. I will not be solving any kind of question here. But I know, since we have solved many number of questions, I know how different points will be twisted and asked a question, that I will definitely try to bring it here. Okay, right. So now I'm going into the session now. So as you could see here, a very good number of chapters we have. So we will pick chapter one by one and we will try to revise it. Okay, then So today, my target will be on this day one. I am planning to cover the chapters of Introduction to Audit. Let me try to give you my agenda, what I have in my mind to cover. So we'll try to cover number one, Introduction to GST. We'll try to cover it. Thereafter, supply under GST, we'll try to cover it. Thereafter, registration, we will try to cover it. So this is what the agenda for today. So we'll try to mainly cover three chapters. One is introduction to GST. Thereafter, we have supply under GST. Thereafter, registration we'll try to do if the time permits. If more time is available, even after completion of these chapters also, if any excess time is left out, I will try to take up the charge of GST chapter. So we will have a see. We will see how long we'll be able to cover, how much content we'll be able to cover. I don't want to rush through the things to the extent of possible. I want to make it, I want to take this session in a calm and composed manner. So primarily, I have the target to complete three chapters. Introduction, supply, registration. Very interesting chapters, very good amount of weightage will be there from these chapters. So we'll try to start with that. Next. So first, let us come to the introduction part, introduction to the GST. Let us try to have a quick look at this chapter. See, this chapter, let me give you one small caution here before I take up this revision of the chapter. See, from this chapter, there will be no significant questions. Hardly some 3 to 5 marks will be tested. If at all, they have to test it. So 3 to 5 marks, they might test it from this chapter, introduction to GST. So, but in this chapter, there will be some fundamental things, there will be some important things which will establish the foundation for the remaining chapters. So that's why, even though not that important from the examination perspective, but to have that flow in the discussion, but to have that conceptual clarity in the discussion, we need to have a quick revision of some important concepts as a part of this chapter. So having said that, let me try to go into the discussion now. See, as we all are aware, GST is nothing but it is a part of indirect tax. Yes or no? So let us try to have a quick look at the entire taxation system in India. So basically, government is there. Government is required to do many activities. They are required to look after public safety. They are required to look after public security. They are required to look after infrastructure requirements. For all that, they are going to need the money. And we all know the primary source of revenue for the government is going to be in the form of taxes. First of all, what is the meaning of the taxes, sir? Tax means it is a compulsory payment. When I say tax, it is going to be a compulsory payment. You are not paying it voluntarily. I know a very handful of people who come and pay voluntarily their taxes. People are paying the taxes because it has been made compulsory on them. It is a mandatory charge. If you don't pay it, you have to face the legal consequences. It will be, you will be liable to face legal consequences since it has been made mandatory on you, since it has been made compulsory on you under some law. That is what we are going to call it as tax. So tax is something which is a compulsory payment and it is not voluntary. It is an enforced payment. They are making you forcefully pay the amount of tax. It is not something you are paying it out of your own choice. It is enforced on you and it is definitely not voluntary. And as we all are aware, in India we have a taxation system. We have three levels of government. One, we have union government, then we have central government, then we have local level government. So in India, mainly we have two kinds of taxation system. One is direct tax and the other one is indirect taxes. So if I have to put it in very simple terms, what are the differences between direct taxes and indirect taxes? So when it comes to direct taxes, these are those kind of taxes where incidence cannot be shifted onto another person. Can you shift the incidence of income tax onto another person? No. What do you mean by not able to shift the burden, not able to shift the incidences? If you take the case of income tax, you are paying the tax, you are the person who is paying the tax, and you're also the person who is bearing the heat of the taxes. So that means whoever is paying the tax, the same person is also having the incidence of the tax, burden of the taxes. That kind of tax we call it as direct taxes, where incidence of tax or burden of tax cannot be shifted. Then we have this thing called indirect taxes. Sir, what is indirect taxes? In case of indirect taxes, incidence will be shifted to the another person. The burden will be shifted to another person. So in case of indirect taxes, I might be the person who is collecting, who is paying the GST to the government. Let us say two major indirect taxes which we have in India is, one is GST and a little bit of customs also we have. And one of the major direct taxation system which we have in India is income tax. So if you take an example of GST, since GST is one of the major indirect taxes which we are currently having in India. So let us say if I'm a shopkeeper, if you come to my shop, if you purchase some item from me, I will collect amount of GST from you. Let us say, for example, I'm selling a product, 100 rupees of product I'm selling. On that 18% of GST, 100 plus 18, 118 rupees I will collect it from you. After collecting that 118 rupees from you, 100 rupees I will keep it in my pocket, 18 rupees I have to pay it to the government. I'm a shopkeeper, I collected the amount of GST from you and I have to pay it to the government. So I have paid, I'm the person, I'm the shopkeeper, I paid 18 rupees of GST to the government, but that 18 rupees, whatever I have paid, that is not going from my pocket. I'm just a mediator. I'm collecting from you, customer, and that I'm depositing with the government. So I might be the payer, but I'm not the person who is bearing the burden of the taxes. I might be the payer of GST to the government, but I'm not having the incidence of taxes. So that is what the distinguishing feature between direct taxes and indirect taxes. And few more differences if I have to tell it here. Direct taxes are progressive in nature. Direct taxes are progressive in nature. Indirect taxes are regressive in nature. Sir, what do you mean by progressive? In case of income tax, if you take, the more you earn, the more income tax you will pay. But when it comes to GST, it is not related with your earnings. It is not related with your earnings. Everybody will be required to pay the same amount of GST. Like today, if I go and purchase one product, if say on that GST is 18 rupees, if I purchase a product, I will also pay the same amount of GST. If some businessman, if some top businessman comes and if some celebrity comes and purchases the product, he will also pay the same amount of GST. If Ambani purchases the product, he will also pay the same amount of GST. So that is what the meaning of regressive in nature. So when it comes to this indirect taxes and especially GST, here it is not at the time of collecting the GST, the government will not see what is your income levels. Irrespective of your income levels, everybody is required to pay the same amount of GST. So that's what we call it as regressive in nature. So whatever it is, we have understood the meaning of the tax and we have understood the two major kinds of taxation system. One is direct taxation system and the other one is indirect taxation system. Now, so this GST talking about a little background here. GST is not something which was there from our independence or something like that. Indirect taxation system is there. Indirect taxes are there. But these indirect taxation system has undergone a significant change in the year 2017. So 2017 is the year where a numerous amount of indirect taxes have been scrapped altogether, and to replace this numerous amount of indirect taxes, a single indirect taxation system has been brought into picture. And what is that single indirect taxation system which has been brought into picture, which has scrapped all the existing indirect tax laws, is GST, which is goods and services tax. Goods and services tax. And if you look at the history of GST in India, the stepping stone has happened somewhere in year 2000. In the year 2000 itself, the discussion regarding the GST and all has started. And starting from 2017, starting from early discussion in the year 2000, we have actually implemented it on 1st of July 2017. So it took almost 17 years from the time the discussion first came in the parliament regarding GST till the time of its effective implementation. It has taken almost 17 years and 3-4 terms of the government it has taken to bring that GST into India. And GST is not such an innovative concept which India has introduced it for the first time. No, this concept of GST has already been there in various other countries. Many other countries are following this concept of GST from a very long period of time, and might be a little bit of important point for MCQC. France was the first country to implement the VAT or GST in 1954. So France is the first country which has this system of VAT or GST, and they have first implemented it in the year 1954 itself. Okay, right. Next. Sir, you are telling earlier there were so many indirect tax laws. Now all that indirect tax laws are replaced by one single thing called GST. No, sir, what are all that taxes which have been taken into GST? So earlier there were numerous number of indirect tax laws were there. As I was saying, all those indirect tax laws were not existing. So GST has replaced many number of existing indirect tax laws. This is what we call it as subsuming. So there are so many indirect tax laws. All that indirect tax laws were absorbed or subsumed into GST. So what do you mean by subsuming, sir? That means once GST has come into picture, these indirect tax laws were no longer there. So what are those indirect tax laws which are subsumed into GST, which are absorbed by GST, which are no longer there after introduction of GST? So this is what is the list. So central taxes, state taxes. So central government has given up some taxes and state governments have also given up some taxes. So when they have lost their right, both central government and state government, when both of these governments have given up their rights to taxes of certain nature, those indirect taxes were subsumed, and to replace them, one single GST has come into picture. Sir, what are the taxes which are subsumed into GST? If you look from the taxes which are used to be imposed by the central government, this is the list which has been subsumed into GST. Like what is it? Central excise duty, additional excise duty. So previously, before this GST came into picture, one of the most common indirect tax which we used to have is excise duty. Excise duty used to be imposed on manufacture. Whenever you manufacture, central government used to come and impose something called excise duty. But once GST has come into picture, this excise duty is no longer there. Service tax, especially on services and all, we used to have this service tax whenever services are provided, but now no longer we have service tax. It has been subsumed into GST. And then we used to have something called excise duty under Medicinal and Toilet Preparation Act. So like this, one separate excise duty used to be there on medicinal and toilet preparation items. That is also gone now. CVD and special CVD, that is also gone now. Thereafter, we have something called central sales tax, and also we used to have something called central surcharges and cesses. In so far as they relate to supply of goods and services, all these things are gone. So these are the central level taxes which are subsumed into GST. Then there are some state level taxes also. Those taxes which used to be imposed by the state governments, even state level taxes are also subsumed into GST. Sir, what are that state level taxes which are subsumed into GST? So if you see here, state surcharges and cesses, in so far as they relate to supply of goods and services, state governments used to impose many kinds of surcharges, many kinds of cesses in relation to supply of goods or services. So all that have been gone now. Thereafter, entertainment tax. State governments used to levy something called entertainment tax, that is also subsumed into GST. One important point here, except those levied by local bodies. See, local bodies also levy something called entertainment tax, that is not yet gone, that is still there. Only entertainment tax which is imposed by the state governments have been subsumed into GST. Even today also, we still have entertainment tax if it is getting imposed by the local bodies like municipal corporations, panchayats. If these people are imposing entertainment tax, that is still there. Only entertainment tax which used to be levied by the state governments, that is gone now, but entertainment tax levied by local bodies is still there. Next, tax on lottery, betting and gambling. This is also gone now because they have also come under GST purview. There used to be something called entry tax, purchase tax and all, gone now. VAT or sales tax, gone. Luxury tax is also gone. Taxes on the advertisements. So like this, state governments used to impose multiple indirect taxes before introduction of GST. All these are gone now. So these are the various taxes which are subsumed into GST. One is this is a list of central taxes, and these are the list of state level taxes. Able to understand? Clear and comfortable, everybody? Right. So now, sir, you are saying GST and all. What exactly is the meaning of GST, sir? What exactly is the meaning of GST? So can you define the term GST? Yes, I could define that for you. So they say that GST means GST is a tax. They have defined GST something like this. GST means it is a tax. So tax on what, sir? Tax on supply. Supply of what, sir? Goods or services. GST is a tax on supply of goods or services. So GST is a tax which will be imposed only when there is a taxable event called supply. So first, even before that supply, there must be something called goods or services or both. We will try to talk about what is the meaning of the goods, what is the meaning of the services, what will get covered in the goods, what will get covered in the services. This will try to have a discussion in our subsequent chapter, which is supply. But just I want you to understand what and all things must be present for this GST to be imposed. So in the constitution itself, where they have defined this, in the constitution of India itself, they have defined the term GST. And how they have defined the term GST is a tax on supply of goods or services or both. That means for GST to be imposed, there must be goods, there must be services, or there must be both. But just having the goods or services or both will not make the government to come and impose GST. There must be one taxable event called supply. There must be a taxable event called supply. Let us say, for example, I'm a dealer in electronic goods. I wanted to trade in the electronic goods. So what I have done is, one day I have opened a shop. So I have taken a shop on rent. In my shop, I have placed my all electronic items. I did not sell it. Just I have loaded all my shop with all the stock. Just because in my shop there are goods, will government come and impose GST? No. Just having the goods will not trigger the government to come and impose GST. There must be a taxable event. Sir, what is the taxable event, sir? Supply. Supply should have taken place. Just because goods are there, government will not impose GST. Just because you have the ability to provide the services, government will not impose GST. When the government will try to impose a GST, government will try to impose a GST only when you have supplied that services. Let us say I'm a chartered accountant. Let us say I have taken certificate of practice. I have taken one office on rent. In my office, outside my office, I have kept a banner. So and so person, chartered accountant, I am ready to provide audit services. I am having the ability to provide services. Just having the ability to provide the services, or you are ready to provide the services, government will not come and impose GST. Once if a client walks inside my office, I provide some services to them. That means I have made a supply of services. Then only government will come and trigger. Then only the government will be triggered to come and impose a GST. So this is how the term GST has been defined. GST is a tax on what? On supply of goods or services or both. So there are some prerequisites here. First, we need to understand what is the meaning of the goods, what is the meaning of the services. Then we need to understand what do you mean by supply. Sir, you are telling supply must be there, but what do you mean by supply? All this discussion, just keep this points on hold. We'll try to have it in our subsequent chapter. Okay, right. But the definition did not end here. The act says GST is a tax on supply of goods or services or both, except what they say here, except alcoholic liquor for human consumption. What they have told, except alcoholic liquor for human consumption. So that means alcoholic liquor for human consumption will never come under GST purview. They have kept alcoholic liquor for human consumption outside of the GST purview. The logic is very simple. The on alcoholic liquor for human consumption, state government will impose excise duty. State governments were ready to give their right to tax every kind of indirect taxes, but state governments told, boss, we are not ready to give our right to impose excise duty on alcoholic liquor for human consumption. We are not ready to give it. If you want to bring the GST, you have to agree to this condition. If you don't agree to this condition, even if you are snatching from us the right to tax that alcoholic liquor for human consumption, we are not going to give our approval for bringing GST. Huge opposition was there from the state governments. So that's why even they have reserved their right by way of including that in the definition of the GST in the constitution. So that's why alcoholic liquor for human consumption is outside of the GST purview. GST is a tax on supply of goods or services or both, except alcoholic liquor for human consumption. That means on alcoholic liquor for human consumption, there will be no GST. GST will not come there. Sir, what about other than alcoholic liquor, other than human consumption? What do you mean by other than human consumption? When I say other than human consumption, I'm not talking about animal consumption. So what do you mean by alcoholic liquor for other than human consumption is, let us say there will be some kind of alcohol which will be used in the perfumes. So there will be some kind of alcohol which will be used in the medicines. So like that, except these things might be coming under GST purview. So only thing which has been excluded from the GST purview is alcoholic liquor exclusively for human consumption. Like today we have this beer, wine, or whatever other names we have, which humans will consume, that is kept outside of the GST purview. Okay, right. So this is how the term GST has been defined in the constitution, and whatever definition I have told you, this is the definition given under constitution. Now, going ahead, there are a few features which we need to understand. When GST has been brought into India, the GST system in India is having three essential characteristics. There are three essential characteristics of GST system in India. Number one, in case of GST has been structured in such a manner that the ultimate burden, final consumer will face the ultimate burden. Final consumer is the person who has to bear the taxes. So ultimate burden of taxes is going to be on the final consumer, not the people who are associated in the supply chain. So when I say until the time the product reaches the final consumer, there is one supply chain. Like there will be a manufacturer, there will be a wholesaler, there will be retailer, then the final consumer will come. And this supply chain has been designed in such a manner that in GST, that tax has to be borne by the ultimate consumer. Final end user like you and me, we are the ultimate sufferers of the GST. So that is the first principle. So GST is such a taxation where final consumer is a person who will bear the taxes. Number two, in India, we have something called dual GST model. in India, the model of GST which has been implemented is dual GST model. Sir, what is dual GST model? Dual GST model means such a GST model where both the central government and state government collectively will have a right to tax a transaction. Where both central government, state government collectively will have the power to impose a tax on a transaction. So that kind of GST model we have, which is a dual GST model. Both central government, state government will have the collective power to impose GST. And in order to understand the dual GST model, in order to understand how the central government and state government will collectively impose the amount of GST, first we need to understand the type of transactions. First, we need to understand the type of transactions. In GST, we are going to broadly divide the transactions into two categories. One is intra-state transaction and the other one is interstate transaction. In order to understand this dual GST system, we need to understand two kinds of transactions. The transactions under GST, I can broadly divide into two categories. One is intrastate, other one is interstate. Sir, what is an intrastate supply? So simply, if I have to put it, if the location of the supplier and the place of supply are in same state, are in same union territory. What do you mean by intrastate supply? When the location of the supplier and the place of supply, if they are falling within the same state or union territory, then we call them as intrastate supply. Let us say, for example, if the location of supplier is in Tamil Nadu and place of supply is also in Tamil Nadu. The location of the supplier is in Tamil Nadu and place of supply is also in Tamil Nadu, then that transaction we call it as intrastate supply. Or if both are falling in the same union territory, like let us say, for example, if the location of the supplier is in Andaman and Nicobar Islands and place of supply is also in Andaman and Nicobar Islands, then also we call it as intrastate supply. So when the location of the supplier and when the place of supply both are falling in the same state or union territory, then what will happen? It will be treated as intrastate supply. And whenever a transaction has been classified as intrastate supply, what will be imposed is there will be something called CGST, which will be imposed by the central government, equal amount of SGST or UTGST. Equal amount of SGST or UTGST. Okay, so anyone will come, either SGST will come or UTGST will come. Let us say, for example, if the location of the supplier, place of supply both are falling within same state, then SGST will come. Tamil Nadu state GST will come. In case if they are both are falling in the same union territory, there will be one UTGST will come. So either SGST or UTGST, any one will be there, both will not be there. So whenever an activity has been classified as intrastate supply, then both central government and state government will have the power to impose GST. So let us say a transaction has been taken place for 1 lakh rupees and it is an intrastate supply. Let us say applicable rate of GST is 9%. Central government will come and impose GST at the rate of 9% on it, which will come to 9,000. Equal amount of GST will be imposed by the state governments also. Let us say we have Tamil Nadu here. Even Tamil Nadu government also will come and impose the same 9% of GST, which will come to total 9,000. So total 1,18,000 rupees of GST will be imposed here. And out of this 1,18,000, this CGST component will be taken up by central government, SGST component will be taken up by state government, respective state government. If it is UTGST, once again it will go to central government only, because union territories are also under administration of central government only, no? If it is a union territory, so that will also go to central government. But that money, the central government have to use it only for these specific union territory. But if it is an SGST, that will go to the respective state government. So this is what regarding intrastate supply. Sir, now what about interstate supply? Sir, what is an interstate supply? If the location of the supplier and the place of supply, if both are falling in two different states, or if both are falling in two different union territories, or if both are falling in one state and one union territory, or if I go one more step ahead, even if they are falling between two different countries, even if it is falling between two different countries, then also I call it as interstate supply only. So what is an interstate supply? When the location of the supplier and the place of supply are falling in two different states, two different union territory, one state and one union territory, or between two different countries, then I call it as interstate supply. And let us say, for example, if the location of supplier is in Andhra Pradesh and he's making the supply of goods to a person who is located in Tamil Nadu. So the place of supply is becoming Tamil Nadu. See, let us don't go by the what is actual meaning of place of supply, location of supplier and all. This is what something which we are about to cover in our subsequent discussion. We have just scratched the surface now. We are at introduction chapter only. There is so much way to go ahead in the subsequent chapter. We will get to know how to determine this place of supply, what exactly is the place of supply. We have a dedicated chapter talking about it. There we will get to know. Just here I am saying place of supply is Tamil Nadu. But a moment the doubt might come to you, sir, how to determine this place of supply? That I can't tell you now itself, because we have a long way to go. We have something called place of supply chapter. There we will all get to know how to determine the place of supply. So, but whatever it is, let us say if the location of the supplier is in Andhra Pradesh and if the place of supply is in Tamil Nadu, both are falling in two different states now. Or let us say if a location of the supplier is in Andaman and Nicobar Islands and place of supply is in Daman Dayu and Dadra Nagar Haveli. Both are falling in two different union territories. Or let us say, for example, the person is located in one state. Location of the supplier is in Andhra Pradesh, whereas place of supply is in Andaman and Nicobar Islands. This is also a between one location of the supplier and place of supply is between one state and one union territory. Or even there could be international transaction. Like let us say, for example, location of the supplier is in US, place of supply is in India. So like that, if the location of the supplier and the place of supply falls in two different states or falls in two different union territories or between one state and one union territory or between different countries, then we are going to call them as interstate supply. International transactions, you keep it on hold now. International transactions, you keep it on hold now. That is something which we need to discuss it as a part of our CA final. At CA inter level, we need not go into the details. We'll restrict our discussion to the domestic transactions only. So in case of interstate supply, let us take this transaction only. Location of the supply is in Andhra Pradesh. Place of supply is in Tamil Nadu. Now what will happen? So once an activity has been classified as interstate supply, now there is no CGST, SGST. What will happen is there will be one single tax called IGST will be imposed. What will be imposed? IGST will be imposed at the rate which is equal to the collective rate of CGST and SGST. Which is equal to the collective rate of CGST and SGST. So for the same transaction, if it is interstate, we have 9% CGST, 9% SGST. Both put together, the rate is 18%. No, a single tax called IGST at the rate which is equivalent to the combined rate of CGST and SGST put together, that rate of tax called IGST will be levied. So if you look at this transaction, let us say, for example, here the transaction has taken place for 1 lakh rupees and it is classified as an interstate supply. Now what will happen? The supplier will collect from you something called IGST at the rate of 18%, 18,000 rupees they will try to collect it. Now total 1,18,000. Now this 18,000 rupees can't be kept by the shopkeeper. This 18,000 rupees of IGST has to be paid to the government. To which government they will pay, sir? To which government they will pay, sir? This IGST will directly go to central government. Central government they will pay. How much? 18,000 they will pay. Sir, can the central government enjoy with that entire 18,000 rupees of money? No, they can't do it. Sir, what they have to do? 50% you keep it. 50% central government will retain it. Sir, how much it is? 9,000 rupees central government will retain it. Sir, what about the balance 50%, sir? Balance 9,000, what they will try to do, sir? Balance 9,000 rupees, they have to remit it to the state governments. They have to remit the balance 50% to the state governments. Sir, which is state government, sir? Now, here I told that location of the supplier is in Andhra Pradesh. Place of supply is in Tamil Nadu. So, to which state government they have to retain it? They have to retain it to which state government? So, it is a destination-based taxation. It is a what? Now, I bring another feature of the GST, which is the one more characteristics of the GST is it is a destination-based tax. It is a destination-based tax. It is not an origin-based tax. It is a destination-based tax. Sir, what is destination-based tax? The GST has to go to that respective state wherever the destination is, sir, wherever the transaction chain is ending. So wherever is the destination, to that destination government, the GST has to, that balance 50% has to go. So what is the destination state government here? The place of supply is falling in Tamil Nadu. That is the final consumption. The final destination of the transaction is routed to Tamil Nadu. So this balance of 50% will go to the Tamil Nadu state government. Able to understand? Clear and comfortable, everybody? So in case of interest-rate supply, so total collective rate, applying the collective rate, a tax called IGST will be imposed. That IGST initially will go to the central government, and central government will keep only 50%. The balance 50% has to be remitted to the destination-based state. Now, one doubt I have here, let us say for example, if the place of supply is not falling in Tamil Nadu, if the place of supply is falling in Union Territory, in Andaman and Nicobar Islands, this is the place, that is the place of supply. Then what central government will do, sir? So here what central government will do is 50% they will keep it. Balance 50%, as per logic, what they should do, balance 50%, they have to remit it to the administration of Andaman and Nicobar Islands. But Andaman and Nicobar Islands is under union government's control only. It is a union territory. No. Who will manage it? Central government only will manage. No. So that balance of 50% also will be retained by the central government only. That 50% they will keep, balance 50% also, that amount also will be kept by the central government only, but in a separate account, separate union territory account, and that amount they have to use it only for this union territory. That amount they have to use it only for this union territory. So this how the settlement will happen between the governments, that is altogether different governments headache. So that I'm not going to go into the detail, but I'm telling you where the revenue should go. Clear? Able to understand? Clear and comfortable, everybody? Right. And see, one more thing I would like to say it here. See, whenever I am saying states and all, so we have state governments. In India, we have state governments, right? So whenever I am saying state, from the GST perspective, it will not just include the states. That 28 states, it will not just include those 28 states. So we have 28 states, right? So we have 28 states. When I say state government, for the purpose of GST, I don't just mean 28 states. There are 3 union territories with their own legislature. There are 3 union territories which are having their own legislature. Sir, what do you mean by own legislature? They will have their own CM, they will have their own government and all. So that 3 union territories with legislature are, so one is Delhi, number 2 we have Puducherry and Jammu Kashmir. Delhi, Puducherry, Jammu Kashmir. So these are the 3 union territories which have their own legislature. Whenever, for the purpose of GST, whenever I am saying states, even these 3 also will be considered equal to the states only. So that's why for the purpose of GST, whenever I am saying state governments, I am referring to not just 28, I am referring to a total of 31 state governments. Sir, we have 28 only. No, yes, we have 28 only. But the 3 union territories which have their own legislature, Delhi, Puducherry, Jammu, Kashmir, even that also we will consider it equivalent to the states only. So for GST, whenever I am saying state government, I am referring to total 31 states. Normal 28 states along with these 3 union territories with the legislature, that also I will consider them at par with the state governments because they are having their own administration. Understood? Clear and comfortable? Right. So this puts an end to the discussion regarding what and all are the characteristics of the GST system in India. Number 1, tax has to be borne by the final consumer. Number 2, in India we are following something called a dual GST model. And number 3, GST is a what kind of taxation? It is a destination based taxation. Clear? Right. So let us try to proceed further now. So having said that, now we'll try to proceed with one concept called, so this dual GST model and all I have covered. Next. So what is the need for and one more important quality, one more important characteristic also I have forgot to mention here. So one more important quality of GST in India is it is a value added tax. It is a what kind of tax? It is a value added tax. Only whenever there is a value addition at each stage, if there is value addition, only on that value added component only GST will be imposed. If there is no value addition, there is no GST. Sir, how this value addition concept will be ensured? I will tell you one simple structure here. See, if you look at the supply chain here, there will be manufacturer, there will be wholesaler, there will be retailer, then there will be final consumer. No. So as I have told, one of the essential characteristic, one of the main characteristics of the GST system in India is the tax has to be borne by the final consumer. Whoever is the final consumer, he has to bear the taxes. So now how it will be ensured? How it will be ensured is, let us say for example, the manufacturer is selling the product at 1 lakh rupees. The manufacturer will procure the raw materials from scratch. He will create a final product. No. So that means from scratch, from zero, he is creating a product of value of 1 lakh. He is creating a product of a value of 1 lakh. How much value addition he has done? How much value addition he has done? 1 lakh rupees of value addition he has done. So on that, GST will be imposed. Whenever he is selling it to the manufacturer, he will charge GST. Let us say for ease in calculation, we'll take the GST rate as 10%. There is no rate of 10% in GST. We have 18%, 5% we have. But for simplicity in calculation, I'm taking it as 10%. So he will charge 10,000 rupees of GST. Total 1,10,000 worth of bill he will give. Now, manufacturer will pay, wholesaler will pay to the manufacturer how much amount? 1,10,000. Now he will cry, no, the manufacturer, the wholesaler will start crying. Why wholesaler will start crying? Because he paid 10,000 rupees of tax. But I told the fundamental thumb rule of GST is tax has to be borne by final consumer. Tax has to be borne by final consumer. Is wholesaler is a final consumer? No. But he paid 10,000 rupees of GST. No. He will start crying. No. Yes, he's crying. But the government will say one thing. Boss, don't worry. You are not the final consumer. No. We will do one thing. You paid how much GST to us? 10,000 rupees of GST you have paid. No. That we will give it to you as credit. We will maintain one wallet in your name. You are not a final consumer. So that's why what we will do is we'll maintain one wallet. Today, like the way we have digital wallets, right? We have PhonePe wallet, we have Paytm wallets and all we have. No. Like that government also told, dear wholesaler, you don't worry. You don't cry. You stop crying. We will maintain one wallet in your name. So that we call it as electronic credit ledger, which we will talk about it in the chapter payment of taxes. So we will create one wallet in your name. So in that wallet, we will give it to you as credit. We will load your wallet with this amount of tax you have paid. Like we will top up our wallets. No, that's why government also saying, since are you a final consumer? No, you are not final consumer. No, you have paid 10,000 rupees of GST. No, that GST we will add it to your wallet. That GST amount, whatever you have paid on your inputs, that we will load it into your wallet, and you can take credit of it. That I call it as input tax credit. That I call it as what? Input tax credit. Sir, what is this input tax credit? When I can avail it? How to avail it? All together, we are going to have a separate discussion in the chapter input tax credit. Just I am telling you, I am making you aware of the entire GST structure so that we can have seamless discussion going forward. Okay, right. So government told, dear manufacturer, don't worry, since you are not the final consumer, whatever GST that you have paid on your inputs, we will add it to your wallet called electronic credit ledger, which you can take the credit of it. Okay. So now what will happen? This manufacturer will sell the product to the retailer, no, because he did not purchase it for his final consumption. So now what is the cost to him? What is the cost to the manufacturer? So what is the cost to the manufacturer? You should not say 1,10,000. The cost to the manufacturer is only 1 lakh rupees because 10,000 rupees is getting as credit. No. Now he will add his margin. No. He will add his margin. Let us say 20% margin he has added. 20,000 rupees margin he will add. Now he has converted that 1 lakh worth of product into 1,20,000. He's selling it at 1,20,000. 1 lakh rupees is his cost. No person will do business on cost to cost basis. They will add their margin. So that 1 lakh worth of product which he has purchased from the manufacturer, he has added the margin and he converted that product into 1,20,000. So what is the value addition he has done here? Wholesaler has done the value addition of 20,000 rupees. Now he will charge GST from the retailer. So GST, let us say 10% GST he will charge. How much he will charge? 10% GST he will charge. Just give me 1 minute. So he will charge GST at the rate of 10%. How much? 1,20,000 into 10%, which will come to 12,000 rupees. Total 1,32,000. That is the amount of bill which will be given to the retailer. Now, how much retailer will pay to the manufacturer, to the wholesaler? 1,32,000 he will pay. Now, can the manufacturer enjoy with that money? No. What he should do? What he should do is, in the previous case also, wholesaler would have paid. In the previous case also, manufacturer would have paid 10,000 rupees of GST to the government. Okay. Here also, the manufacturer can't enjoy with total 1,32,000. What he will do, sir? 1,20,000 he will keep it in the pocket and he has to pay that 12,000 rupees of money to the government. No. So that I will call it as output tax liability. That I will call it as what? Output tax liability. You collected total 1,32,000, but 1,20,000 is only your sale consideration. Balance at 12,000 you have collected in the name of GST. That money you can't enjoy. That money you have to deposit it with the government. So that I will call it as output tax liability. So here your output tax liability is going to be total 12,000 rupees. But I'm not a fool, no, because I will not pay the amount. I have a wallet. In my wallet already 10,000 rupees money government has loaded, right? So now what I will do is, so that output tax liability, I will adjust it against my input tax credit and balance 2,000 rupees only I will pay to the government. So how much money has gone from from wholesaler to the government? 2000 rupees has gone to the government. So from manufacturer, 10,000 rupees has gone to the government. From wholesaler, another 2,000 rupees have gone to the government. Now, retailer, what he will do? Now he will make a final supply to the consumer. No, right? When the final consumer will walk into the retailer like you and me, to that final consumer he will sell. Sir, what is the cost to the retailer, sir? Don't say 1,32,000 because 12,000 rupees. Once again, here what will happen is retailer has paid 12,000 rupees of GST to the government. No. Now retailer will cry once again, sir, I am not the final consumer, but I have paid 12,000 rupees of GST. Government told, okay, stop crying. I will do one thing. You paid GST. No, that I will give it to you as credit. Since you are not the final consumer, 12,000 rupees of GST you have paid, that I will give it to you as credit. I will also maintain wallet in your name. In that wallet, I will load this money. Okay, ITC, I have got it here. So now, once again, if you look from the retailer perspective, what is the cost? 1,20,000. To that, he will also add margin. Definitely, margin he has to add. Let us say 20% margin he is adding. So 20% margin if he adds, 24,000, 20% margin means how much here it will be? 1,20,000 into 20%. 14,400, no. How much? 24,000, I guess. Yeah. So 24,000 rupees of margin he has added. So total 1,44,000 rupees is the selling price. On that he will collect a GST. No, how much? 10%. 14,400. Total 1,58,400 rupees is the value. Now this final consumer will pay this entire amount. 1,58,400 he will pay. Now this retailer can't enjoy with the entire money. He is having a GST payment. No, how much? 14,400 is he is required to pay to the government. So what is his output tax liability? So his output tax liability is going to be 14,400. In that, once again, like any prudent businessman, he will not make the cash payment because he's having already a wallet with the government. In that wallet, already money is loaded amounting to 12,000 rupees, which he will take the credit of it. The balance of 2,400 rupees he will pay to the government. This amount has gone to the government. Sir, now what about final consumer, sir? Can he also go and cry before the government? Boss, I have paid 14,400 rupees of GST. Give me also credit. No, he can't go and cry before the government. Why he can't go and cry before the government? I already told you the first fundamental principle of GST. The GST has to be borne by the final consumer. Are you the final consumer? Yes. Suffer GST. Suffer with the amount of GST. So this final consumer can't go and cry now. This entire 14,400 of GST that he has to pay. Now, if you look at this example carefully, how much amount of GST final consumer has paid? Totally 14,400. How much government has got? If you pay close attention, from manufacturer, they got 10,000. From wholesaler, they got 2,000. From retailer, they got 2,400. And even if you pay close attention, government has also got only 14,400 and that amount has been ultimately paid by the final consumer. And one more point, if I have to pay, if you pay close attention here, at every stage, if you see the net amount which is going to the government is only on value addition. Like if you take the manufacturer from zero, he has created a product of value of 1 lakh rupees. So value addition, how much he has done? 1 lakh value addition he has done. That's why he's paying on 1 lakh 10% rate of GST, 10,000 he has paid to the government. Now, this wholesaler has converted that product of 1 lakh into 1,20,000. So what is the value addition he has done? 20,000 rupees. So if I multiply the rate of GST on that value addition, it will come to 2,000. And if you pay close attention here, from the manufacturer, net 2,000 rupees only has gone to the government. Now, retailer has converted that 1,20,000 product into 1,44,000. So what value addition retailer has done? 24,000. If I multiply the rate of GST on that value addition, amount will come to 2,400. And as you could see here from the retailer, the amount which has gone to the government is once again 2,400 only. This is what the meaning of value addition, value added tax. So GST is such a taxation mechanism which is a value added tax. Only if there is value addition, there will be GST. If there is no value addition, there is no concept of GST at all. Let us say, for example, if the retailer is selling on cost to cost basis without adding any profit margin, at 1,20,000 rupees only he is selling. If you take a typical scenario, let us say here the situation is something like this: 1,20,000, no margin, selling price is also 1,20,000. He will collect GST at the rate of 10% amounting to 12,000, total 1,32,000. Now his output tax liability will become 12,000. And anyhow, he is having an input tax credit of 12,000. Will he pay any amount of extra GST to the government? No. So if you pay close attention here, there is no value addition. Since there is no value addition, there is no amount of GST also which is going to be get paid to the government. Understood? Right. So these are all some essential characteristics of the GST. All this discussion is very important because If you have clarity on these fundamental aspects, then only the future discussion is going to be very smooth. So these are the essential characteristics of GST. What are they? The tax is the final burden of that GST is on the final consumer. And in India, we have dual GST model, and GST is a destination based taxation, and GST is a value added tax. Right. So this is what regarding characteristics of the GST. Then there is one more thing, sir. What is the need for GST in India? So you are telling that GST has come into picture in the year 2017. Before 2017, is there no indirect taxation system in India? No, I did not say it. Even before 2017 also, we have a indirect taxation system in India. But that is very complex. We used to have multiple indirect taxation laws, because of which administration has become very difficult. There was no ease of business. So that's why the existing indirect taxation system was suffering from so many deficiencies, from so many weaknesses, which made the government to think about a new GST system, a new indirect taxation system called GST, which will overcome the problems of the existing indirect tax regime. So even before GST also, we have an indirect tax regime, but that indirect taxation regime was suffering from so many problems. So that's why the GST has come. So that is what the need for GST in India, because existing taxation system is suffering from some weaknesses. To overrule that deficiencies, GST has come. And what are all that problems which are there in earlier taxation regime is there used to be something called double taxation. So let us say, for example, there used to be some issues regarding certain products. If you take pre-packaged software, traditionally what used to happen is before GST, we used to have two kinds of indirect taxes. On goods, we used to have something called VAT. On services, we used to have something called service tax. And on these kind of products like packaged software, like today you can go and buy something called a packaged software. So there used to be confusion. So state governments used to treat that as goods because you used to get a pen drive or a CD in which the software will be loaded. So state governments used to treat it as goods because you are getting that pen drive or CD, and they used to impose VAT. Service tax department used to say, see, this good, this CD or pen drive, whatever you are getting is just a carrier. Actually, there is a supply of software is happening, which is a service. They used to impose service tax. Product is one, but taxes are two. They used to impose VAT also. They used to impose service tax also. So like that, there used to be double taxation, which is one of the major problem. Then there will be cascading of taxes. There used to be something called cascading of taxes. There used to be tax on tax. See, all this is not important because all these weaknesses are there. To overcome that weaknesses only GST has come. GST has anyhow come now. What are the problems in the old indirect taxation system? Those are no longer relevant today. But since as they have given in the material, sometimes they ask a question from here. So that's why I'm taking up some time, a few minutes. So main problem with the existing taxation system was double taxation. Number two, there used to be something called cascading of taxes. There used to be something called tax on tax. So here the example, if you refer, let us say we used to have excise law. No? In excise law, let us say I have done the manufacture. The assessable value is 1000. Now central government used to come and impose something called 12.5% of excise duty. They used to impose 125 excise duty. Now my total value will become 1125,000 rupees is the assessable value. Thereafter 125 rupees is excise duty. On manufacture, they used to impose excise duty. Now after manufacture, I will go and sell it. No. Once I go and sell it, now the state government will come and impose something called VAT on me. Let us say VAT rate is 14.3%. And this 14.3%, they don't just levy on 1000 rupees. They used to levy that 14.3% on 1000 rupees plus 125. On total 1125, they used to impose at 14.3%. Now in this 1125, only 1000 rupees is value. 125 rupees is tax, which is excise duty. But you are imposing that 14.3% even on excise duty also. There is a tax on tax. So this used to be the major problem. There used to be cascading of taxes. And also this setup was not possible. You might have excise duty credit that you can't use it for VAT. Like the way I told you the example, I'm adjusting my output tax liability with the input tax credit. No, today since we have only one GST, one taxation, we can easily adjust it. But previously, let us say I have a output tax liability under VAT, but I might have paid service tax on my inputs. Sir, can I adjust my service tax against my VAT? Not possible. Can I adjust my excise duty under VAT? Not possible. Can I adjust my CST under VAT? Not possible. So like that, set off was not possible. Next, there used to be multiple level of taxes which are not subsumed into VAT. Previously, we used to have VAT. Even along with VAT also, we used to have multiple kinds of state level taxes. And it was not integrated with tax on services. And one more point, service tax used to be levied only by government, central government. Central government used to levy only service tax. Sorry, if I put it in other way around, service tax used to be levied only by the central government. But service sector was very much booming in our country. Service sector was very much booming in our country. So that is a very rapidly growing industry. And central government told on services we will only collect service tax. So that means state governments has lost the revenue, has lost the right to tax services completely. And service sector was rapidly growing. So here also state government suffered a lot because they are not getting revenue, because service sector is booming. All the revenue is taken by the central government on that. And also CST caused distortion. Like as I've told, CST credit, there used to be something called CST. CST also you can't use it for VAT payment. That set off was not possible. So like that, multiple problems are there in the existing indirect taxation system, which led to the introduction of GST into India. Next, yeah. Now we have some legislative framework. In that legislative framework, a few things which we are required to understand is, see, as per constitution, if government has to impose GST, that has to be compulsorily imposed under some law. There should be some law under which GST has to be imposed. I told CGST, no, CGST is getting imposed under CGST Act. We have a CGST Act. Under that CGST Act, they will impose the CGST. So we have IGST, no, IGST is getting imposed under IGST Act. Even SGST is there, no. For imposing SGST also, we have state level acts. We have state level acts. Every state will have a SGST Act. Like AP will have a AP SGST Act, and also Tamil Nadu will have Tamil Nadu GST Act. So they have, those states have made their respective state GST Acts under which they are imposing the GST. And for collecting UT GST, we have one UT GST Act. We have one UT GST Act under which UT GST is getting collected. So as per the constitution, if you have to collect any tax, there must be some law, there must be some governing law. And even for imposing GST also, they have brought various governing laws. CGST is getting imposed under CGST Act, IGST is getting imposed under IGST Act, SGST is getting imposed under SGST Act, UTGST is getting imposed under UTGST Act. So if you pay close attention here the most important thing which we have to pay attention here is, if you look at the CGST Act, it is applicable for whole of India. It is applicable for whole of India. Now, one thing which we have to remember here, sir, what is the meaning of the term India? What is the meaning of the term India? What will be covered in India definition? What will not be covered under India definition? So let us see here. What will be covered in India definition? So it includes entire territory of India. We have an India map, no? So that entire landmass of India, that will fall under India definition. Not just that, it also includes the territorial waters. It also includes what? Territorial waters. Sir, what is territorial waters? See, if you take India map, all this land mass will fall under India definition. Now, not just land mass, territorial waters. Sir, what do you mean by territorial waters? From the coastal line, if you go up to 12 nautical miles. How many nautical miles? If you go up to 12 nautical miles, that I call it as territorial waters. Even that territorial waters also will be included in India definition. Not just the territorial waters. Under that territorial waters, there will be seabed, no? There will be seabed, subsoil will be there. That will also fall under India definition. Okay, so if you look at it here, it will contain territorial waters, seabed and subsoil underlying such waters. Not just that, my dear students, it also includes something called continental shelf and exclusive economic zone. Sir, what is continental shelf or what is exclusive economic zone? From the coastal line, if you go up to 200 nautical miles, how many nautical miles? 200 nautical miles. Up to 12 nautical miles, territorial waters. After that, up to 200 nautical miles, this we call it as exclusive economic zone. This we call it as what? Exclusive economic zone. Sir, why this is also included? Why? Because up to this 200 nautical miles, this is where oil exploration will happen. Oil rigs and all will happen. Oil rigs will be placed, like Reliance will have oil rigs and all installed there. So government wants to even impose GST on that. So that's why what they have told us, this from beyond the territorial waters up to 200 nautical miles, we have this area called, we call that area as exclusive economic zone. That will also form part of India definition. And below that water, we will have that soil. We'll have that landmass, right? That I call it as continental shelf. That I call it as what? Continental shelf. That continental shelf also will form part of India definition. So what? Tell me, what and all will get included in India definition? It includes entire territory of India. It includes territorial waters up to 12 nautical miles. It includes seabed and subsoil behind it. and it also includes something called exclusive economic zone, which can extend up to 200 nautical miles from the coastal line, and below that whatever landmass we have, which we call it as continental shelf, that will also fall under India definition. Next, thereafter, it also includes any other maritime zone. There is something called maritime zone. Let us say, for example, below India, we have Sri Lanka, right? Here also, I can't say I will go up to 200 nautical miles. That is my territory. Why? Because even Sri Lanka also should have water access. So that's why with Sri Lanka we have an agreement, maritime zone agreement we have. So with the Sri Lanka we have an agreement. Let us say, if I'm not wrong, the distance is somewhere around 18 nautical miles between India and Sri Lanka. We have a maritime agreement with Sri Lanka where we have divided 9 nautical miles will be with India, 9 nautical miles will be with Sri Lanka. So this I call it as maritime zone. Even this maritime zone also will fall under India definition. Okay, right. And not just that, my dear students, even airspace above its territory and territorial waters, above the landmass, above the territorial waters, whatever airspace is there, that will also fall under India definition. Let us say you're traveling on a plane and in the aircraft you have purchased some food and ate it. That is also supply. So it is not happening on landmass. No, who told India is only landmass? So that's why they are extending the definition, and even they're saying airspace above the territory of India and territorial waters, that will also fall under India definition. Understood? So this is one of the important definition which you have to pay attention. So CGST Act, IGST Act extends to whole of India. And what is the meaning of the term India we have understood. SGST Act will become applicable only for the respective state. Let us say, for example, AP government is having a GST Act that will become applicable only for the AP territory. Tamil Nadu state government will have their own CGST Act, own SGST Act that will become applicable only for the state of Tamil Nadu. Kerala government will have their Kerala SGST Act that will become applicable only for the Kerala government. So like that, state level, they have their own acts. And we have Union Territory Act, UTGST Act. We have this UTGST Act extends to only those union territories without legislature. I already told you 3 union territories are there with legislature. They also will be treated equal to states. They will have their state level SGST acts. But whatever remaining union territories are there without any legislature, for all of them we have one single act, UTGST Act, that will become applicable. And what are that union territories without legislature? Andaman and Nicobar Islands, Lakshadweep, Dadra and Nagar Haveli, and Daman Dayu, Ladakh, Chandigarh, and other territory. So these all will fall under union territories. For all these union territories without legislature, we have one single act called UTGST Act 2017, which will become applicable. Now, so the next important part, there is a special treatment. There are certain products for which there is a special treatment under GST. So what are that products and what is that concerned special treatment for that products? Very important for MCQs and very important from descriptive question perspective also. Listen carefully. Right. So what is that first product? Alcoholic liquor for human consumption. Alcoholic liquor for human consumption. As I've already told you, in the definition which they have kept it in the constitution, from the definition of the GST itself, they have excluded alcoholic liquor for human consumption. So on alcoholic liquor for human consumption, it is outside of the GST purview. Now in future, always alcoholic liquor for human consumption will be outside of the GST purview. The government will not impose GST on alcoholic liquor for human consumption. Sir, if no GST, there will be no other taxes? No. What other taxes will be imposed on alcoholic liquor for human consumption? State level excise duty will be imposed. Whenever it is getting manufactured, state government will impose excise duty. And whenever it is getting sold, if it is getting sold within state, VAT will be imposed by the state government. And if it is getting sold, sorry, if it is getting sold interstate, then CST will be imposed. That means old indirect tax laws will become applicable. So when it comes to alcoholic liquor for human consumption, number 1, it is outside of the GST purview. Number 2, what will be imposed, sir? State level excise duties, and whenever it is getting manufactured, state government will impose excise duty, and whenever it is getting sold, depending on whether it is interstate or intrastate, CST or VAT will be imposed. And one more point I would like to add it here. Not just alcoholic liquor for human consumption, there are 2 more products which are outside of the GST purview, which is undenatured extra neutral alcohol, undenatured extra neutral alcohol, and rectified spirit, which is used in the manufacture of alcoholic liquor for human consumption, that is also outside of the GST purview. that is also outside of GST purview. Not just alcoholic liquor for human consumption, even undenatured extra neutral alcohol and rectified spirit. Basically, these are raw material. These are raw materials for the purpose of manufacturing alcoholic liquor for human consumption. That is also kept outside of the GST purview. So alcoholic liquor for human consumption, not just that, undenatured extra neutral alcohol and rectified spirit, which is getting used in the manufacture of alcoholic liquor for human consumption, that has also been kept outside of the GST purview. So this is one special product. Then we have 5 petroleum products. 5 petroleum products today, the hot topic today, this petroleum, diesel, petrol. So this is what hot topic now because of the ongoing war between US, Iran, Israel. So this is what the current situation today. And recently also you might have seen the news on petrol, diesel. Government has cut down excise duty and all. Have you heard the news? In the recent times, in the last 2-3 days only, the news has come in the social media saying that the government has cut the excise duty. You have not heard the news. Government has cut down the GST on the petroleum. No. Why? Because even on that petroleum products also GST is not there. So how many petroleum products? 5 petroleum products: petroleum crude, diesel, petrol, ATF, aviation turbine fuel, and natural gas. These 5 you have to mug up. These 5 products you have to remember: petroleum crude, petrol, diesel, aviation turbine fuel, and natural gas. So on these 5 petroleum products, they are currently not under GST purview. I am not saying permanently they will be kept outside of the GST purview, but for the time being now, currently they are outside of the GST purview. The government will notify a date in the future. From the date notified, these 5 petroleum products also will come under GST purview. See, I hope you're able to understand the difference. Alcoholic liquor for human consumption, now, never, now, even in the future also, now and never, it will not come under GST purview. Whereas these 5 petroleum products, currently they are not under GST purview. In future, the government will notify a date. From the date notified, these products will be brought under GST purview. But currently they are outside of the GST purview. Okay, sir. Currently they are outside of GST purview. That means will there be no tax on these 5 petroleum products? No. Who said that? No one said that. Then what will be imposed, sir? Central excise duty. Central government will come and impose something called central excise duty whenever these 5 petroleum products are getting manufactured, and whenever it is getting sold, CST or VAT also will get imposed. Next one. Tobacco. On tobacco products also, tobacco is something which is subjected to double taxation. So what is a double taxation is, whenever tobacco is getting sold, GST will be imposed. Not just a GST, even central excise duty. Whenever it is getting manufactured, even central excise duty also will be there. Double taxation. Sir, why double taxation? Because it is a sin product, it is a harmful product. Government want to discourage it. So that's why they will impose both the GST and also central excise duty. Then when it comes to opium, Indian hemp, and other narcotic drugs and narcotics, for these products, GST will be there. Along with that, state level excise duties also will be there. State government is also going to impose something called an excise duty. So these are various products for which there is a special treatment under GST. Some products are outside of the GST purview, and 2 products are subjected to double taxation. One is tobacco and opium, Indian hemp, and other narcotic drugs and narcotics. Right? So this is something which you have to remember. So this is what the important discussion, guys, from this chapter, whatever discussion we had till now, this is going to be the important discussion. Hereafter, we have some other small things, like there is something called GST Common Portal. Nothing but GST Common Portal is a website, www.gst.gov.in, where all this GST compliances will happen. If you want to take registration, if you want to file your returns, if you want to make the payment of taxes, if the department want to conduct audit, if the department want to do any proceedings, everything is taken electronically with the help of this one single common portal, www.gst.gov.in. So that we call it as Common Portal. This website we are going to come across in our subsequent chapters also. So like this, we have one common website through which we can handle all our GST compliances. Then for e-way bills, we have separate portal called www.ewaybill.gst.gov.in. And for e-invoices, we have separate portal. This we will anyhow have a separate discussion in our subsequent chapters. And in addition to that, we have something called GST compensation cess. Sir, what is this GST compensation cess? If I have to put it in very simple terms, because of introduction of GST, some state governments are losing revenue. Some state governments are losing revenue. To compensate the state governments for loss of revenue, central government told, dear state governments, you don't cry. You are suffering some loss, no, because of introduction of GST. What we will do is we will try to compensate you. Central government made a promise to compensate the states who are losing revenue because of introduction of GST. But how central government will compensate, sir? They don't have their own deep pockets, no, from which they can compensate. What they will do? Okay, we will compensate state governments, but how we will compensate? We will collect a separate tax from the customer. We customers only. So we are going to collect a separate tax from the citizens in the name of GST compensation. Says that we will collect it and compensate it to you. So like that, we have one more extra tax called GST compensation cess, which government will impose on specified luxury and demerit goods. Not on every good. Whenever you are buying luxury goods and demerit goods, on that they will impose something called compensation cess, and that will be used for compensating the revenue loss to the state governments. So it was still actual applicability is till 31st of March 2026. Tomorrow only. Tomorrow is only the last day for imposition of GST compensation cess. Anyhow, this GST compensation cess has become ineffective. So starting from 22nd of September itself, what the government has done is they are not imposing GST compensation cess, but instead what they have done is they have increased the GST rate only. Previously, what used to happen is on motor vehicles, on cars and all, there used to be 28% GST and 22% compensation cess used to be there. But recently, government has made a move. What they have done is, okay, no longer we are going to collect GST compensation cess, but what we will do is we will increase the rate of GST itself from 28% to 40%. Not important from the examination, just I'm letting you know what are the recent changes which are happening in the industry. So tomorrow is the last day for levy of GST compensation cess. After that, there will be nothing called GST compensation cess. Don't think that government is sparing us, but instead what they have done is they are eliminating the GST compensation cess, but wherever they want, they are increasing the GST rate. Directly to 40%, they are bringing it here. Like on tobacco products, directly 40%. On motor vehicles, on cars and all, directly 40% they are bringing it. But GST compensation is going to go away. Okay, right. Then we have one small concept called GSPs or ASPs. Sir, what is this GSP or ASP? Very simple. See, we have this GST portal, no? We have this GST portal. So this GST portal is getting managed by one entity called GST network. Like that, one GSTN is there, which is managing the GST portal. Now, there are some big clients and all. Like let us say, for example, if you take the listed companies and all, they are also required to file the returns and all. But it will be very difficult for them to follow this usual tools which are available on the portal. There is a network called GSTN which is maintaining this portal. They will provide basic facilities. They will not provide you advanced features and all. But if you take the so-called big companies, they are required to file returns. If you take the example of DMart, on a daily basis, DMart will make thousands of sales. Monthly, they might be required to upload the details of crores of transactions. They can't appoint a person who will do the manual feeding of all the data on the common portal. And even we can't expect this GST network also, we can't expect to develop some tools for us. So that's why what the government has done is, what this GSTN has told is, they have identified some fintech companies. And to these fintech companies, they have given access to the GST portal, whom they are going to call it as GSPs, GST Suvidha Providers. So now what these GSPs will do is, they will build some tools for this people. They will build the tools for the citizens to interact with the GST portal in an effective manner. Okay, so if I put it in very simple term, like Infosys, TCS, these people have been identified as GSPs. They try to help this big entities develop some advanced tools and easy tools which they can use it for filing the returns and handling their compliances. So that is what the role of GSP. GSP act as a connection between the taxpayer and the GST network. Now, all the apps they can't develop by themselves. These fintech companies like Infosys, TCS, they can't develop the apps on their own. So that's why they are taking help of one more mediator called ASPs, application service providers, like Tally. They're taking the help of Tally and all. So that we call them as application service providers. If I have to end the entire discussion in one single line, GSPs will act as a connection between the taxpayer and GST network, whereas ASPs will act as a connection between taxpayers and GSPs. That's all. This much if you remember it, it will be enough. Next, sir, what are the benefits of GST system? This you can have a quick look at it. So it will, what are the benefits to the economy? It will lead to a unified national market. It will also it will also boost up the Make in India initiative. It will also boost investment and employment. More investment will start flowing into India. More employment will get generated. All this is not happening anyhow. Simplified tax structure. the tax structure has become very easy than when compared with the earlier indirect taxation system. Ease of doing business not happening. Certainty in tax administration, that means earlier you used to be subjected to multiple authorities. If any issue goes on against you, multiple people will come and sit in your office. Excess department will come, VAT department will come, service tax department will come. But now we don't have that uncertainty. Only one department will come. If we do any mistake, which is department? GST department will come. So certainty in tax administration. Easy tax compliances. Everything is technology driven. IT processes are there. Everything we are doing today in GST with the help of technology. No manual going to the offices and also submitting any manual forms. Nothing is there. Everything is technology driven. We have one single common portal. Through that common portal, we are taking, that through single common portal, we are getting all our compliances done. And easier tax compliances. Even the trade and industry also will get benefited by way of lower tax burden and mitigation of cascading of the taxes. Even industry and trade is also going to get benefited. And then we have constitutional provisions. So what is this constitutional provisions is, to bring that GST system into India, we altogether needed a constitutional amendment. Constitution was required to be amended to bring the GST into India. So if you see here I have told you. So the constitution will contain different parts and all. At various parts they have made the amendment. So I will tell you only those amendments which are necessary here, not so relevant here. Right. So one thing which we have to remember is there are some definitions. So Article 366, there are a few definitions. So what is the meaning of GST? Any tax on supply of goods or services or both, except on supply of alcoholic liquor for human consumption. This I've already told you. This I've already explained. In Article 366, they have defined the term GST. It is a tax on supply of goods or services or both, except on supply of alcoholic liquor for human consumption. Then they have created something called a GST Council. This is one more thing which is important. Remaining are all just some references where and all constitution, which and all articles have been amended. I'm telling you, I'm trying to revise only important things here. So Article 279A, GST Council. So in order to, since this GST system is going to be new in India, new issues will come up and all these issues are required to be resolved. One expert assistance is needed. So that's why to look after this effective implementation of GST in our country, a GST Council was created under Article 279A. So what is that GST Council? Let us see who and all will be there in the GST Council. So the President of India has constituted a joint forum which will contain representatives from both central governments and state governments, and they have given that forum a name called GST Council. Sir, who will be there in the GST Council, sir? There will be Union Finance Minister, R. Nirmala Sitharaman, currently Finance Minister. She will be the chairperson. And Union Minister of State, in charge of Revenue or Finance, is member. Once again, Union Minister only. Another Union Minister who is in charge of Revenue or Finance, he will also be a member. Not just that, Minister in charge of Finance, Taxation or any other minister nominated by state government. Even state government will nominate from their respective state either minister who is in charge of finance or tax minister or any other minister will be nominated by state government. He will also become member. So that means there will be 2 people representing central government and there will be altogether 31 people who will be representing state governments. I told 31 states, no, for the purpose of GST, whenever I say states, there are 31 states. So we have 2 people representing central government and we have altogether 31 people who are representing state governments, and they collectively created a forum and gave them a name called GST Council. Now this GST Council will look after this practical issues in the implementation of the GST. Periodically we get notifications, circulars and all we are getting, no. So all that will be under the supervision of the GST Council. So what are the different matters which GST Council will make recommendations? So this GST Council will suggest various recommendations regarding the implementation of GST, and what and all are the different matters which a GST Council will make recommendations is like taxes, surcharges which are required to be subsumed. What and all taxes have to go away. I showed you the list which taxes are subsumed into GST. Who decided it? GST Council has decided it. And exemptions, which goods are exempted, which services are exempted, they will also give the recommendation on this matter. And they will draft GST laws. They will decide principles of levy, how to apportion, how to govern place of supply. All this also they will decide. Turnover limits. So when the person is liable for registration, when the person is not liable for registration, how to calculate, what will be the applicable threshold limit for registration, all that will be decided by them. And rates of GST, any special rates for certain duration during natural calamity, disaster, and all. And also we have special category states. For that special category states, they will decide on special provisions, like what are special category states: Arunachal Pradesh, Assam, Jammu Kashmir, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh, and Uttarakhand. For these special category states, we have special provisions also, which we are about to see in our subsequent chapters. Who will decide it? GST council will decide it, or any other matter relating to GST as the council may decide. And it will, the main objective is to develop a harmonized, a uniform national market. And even for this GST council meetings also, there should be quorum. What is the minimum quorum? One half of the total members. One half of the total number of members must be there in the quorum. And even there should be decision should be taken by majority. What, how much majority you want? Not just simple majority, majority of not less than 3/4 of the weighted votes. So in order to take a decision, you need 3/4 of majority. And this will be calculated. Weights also will be given to the votes. This you need not worry about it. Just you have to remember this majority. How much majority is required? Not less than 3/4 of the weighted average votes. You need to be there in favor in order to take any decision. I have told you in our regular class, we have spent a lot of time in understanding how to determine the weightage for the votes and all, how to calculate the majority and all. We have seen that is all not important. In regular class, we have explained it, but now that itself will take some 20-30 minutes of the time. So I'm not doing that. Once again, not important from the examination perspective. Yeah. And these are all some procedural formalities. So this is what one constitutional amendment which we have to worry about it. Remaining and all, just you can give a quick look and ignore it. So with this, we are done with introduction to the GST chapter. We have successfully revised introduction to the GST chapter. Clear everyone? So now we have to proceed ahead with supply under GST. The next chapter which we have to take up for revision is going to be supply under GST. But before that, we will take one short break, since it has been since it's going to be a very long session. You will also lose attraction and focus. So we'll do one thing. We'll take one short break for 10 minutes. After 10 minutes of break, we'll continue with the next chapter. Okay. So I don't want you to lose the track because of the continuous boredom and all. So we'll do one thing. Some 10 minutes of break we will take, and thereafter we will resume back with our subsequent chapter. So now the time is 10:27. Please do come back by 10:37. We will resume. At this time, we are going to resume. So take one short break now. Okay, guys, welcome back. So now we'll be trying to do the next chapter, the very important chapter from the examination perspective, which is supply under GST. Very, very important. So if you are not having an understanding of this particular chapter, let me give you a caution well in advance. If you are not having an understanding of this particular chapter, if you are not well versed with the contents of this chapter, I am telling you, rest of your GST preparation is going to be not worth at all. So this is such a chapter. If you don't understand this chapter, there is no purpose of learning the remaining chapters at all. So first, let me give you overall structure, what and all we are going to cover as a part of this chapter. Right. So what and all we'll be covering as a part of this chapter. Let me give you one overall structure. Thereafter, we'll go into the technical discussion. So guys, if you remember, just in the introduction to the GST, I have told you one simple point. I have told you the meaning of the term GST, how the term GST has been defined in the constitution. So we have seen that they have defined GST like GST is a tax on what? On supply of goods or services or both. So, in the definition of the GST which has been given in the constitution, they are very specific. They told that GST will be imposed only when there is an activity called supply. Only when there is an activity called supply. So, supply is a taxable event under GST. If there is no supply, then there is no GST at all. First, for the government to come and impose GST, there must be an activity called supply. If there is no activity called supply, there is no question of imposing GST only. So if I have to put it in other way around, the prerequisite for imposing the GST is supply. But before we talk about supply, even one more thing, the definition says GST is a tax on supply, it is there, but on supply of goods or services or both. So that means before we can see whether supply is there or not, first we should see whether the subject matter is goods or services or not. So if I put it in other way around, first there must be goods or there must be services or there must be both. And just having the goods or services or both alone will not be enough. There must be supply. That is the triggering point for the government to come and impose GST. I hope you're all clear on it. So what I will say here is, before we could go ahead and understand the meaning of the term supply, it will be wise enough for us to understand what is the meaning of the goods, what is the meaning of the services. So first we'll try to spend some time in revising what is the meaning of the term goods, what is the meaning of the term services. Because first goods or services must be there, then only we should check whether there is a supply or not. So what is the meaning of the term goods, sir? What is the meaning of the term services, sir? Let us try to understand it. So first I will talk about what is the meaning of the term goods. So what is the meaning of the goods? The term goods has been defined something like this. Goods means every kind of movable property. One by one, step by step, we will try to revise it. So they are saying that goods means every kind of movable property. Sir, now what is the meaning of the movable property? You told goods means every kind of movable property. What is movable property? The property which is can be moved from one place to another place. Like for example, if you take this mic, movable property. If you take this pencil, movable property. If you take a car, movable property. So like that, any kind of movable property will fall under goods. But what is the exact meaning of the term movable properties? They say that movable property means other than immobile property. They say what is a movable property which is other than immobile property. Sir, then what is immobile property? Immobile property means land. Land will come under immobile property. And benefits arising out of land. Whatever benefits are there which are arising out of land, like construction rights, development rights on the land, that will also fall under immobile property definition. Not just that, things which are permanently attached or things which are permanently fastened to the earth, that also will fall under immobile property. Things which are permanently attached or permanently fastened to the earth, that also will fall under immobile property. Like let us say for example, building. Building is something which is permanently fastened to the earth. Or you take trees. Tree is also something which is naturally attached to the earth permanently. So like this, land, benefits arising out of land, or things which are attached to or forming part of the earth, that we call it as immobile property. If something is immobile property, then it is not goods. If something is falling under immobile property definition, then it is not goods. Why? Because goods means only every kind of mobile property, and mobile property means something other than immobile property. So land will not become goods, buildings will not become goods, things which are permanently attached or forming part of the earth will not become goods, benefits arising out of land also will not become goods. This point everybody clear? Right. So goods means every kind of mobile property. However, they did not stop it here. They say that other than goods does not include other than money and securities. Goods does not include money and securities. Money and security will not be considered as goods definition. Sir, what is the meaning of the term money? They're saying that money is movable, but they're saying money will not fall under goods definition. Even securities also will not fall under goods definition. But before that, first we should understand what is the meaning of the term money, what is the meaning of the term securities. Securities means, if I have to put it simply, as per SEBI and all, we have this shares, bonds, debentures we have, right? So all that will form part of securities definition. If I am buying shares or if I am selling shares, they told that these securities are not considered as goods. Shares, bonds, debentures, all these kinds of activities or mutual fund units, whatever it is, they are not considered as goods. Now you should get a doubt. Sir, if not goods, no GST? No, we have to check one more line, one more step. If something is not falling under goods, we need to check whether it is falling under services. Why? Because for imposing GST, just having goods is not the condition. It could be either goods or it could be services also, no? So first we are at the first step. If something is not falling under goods, don't automatically conclude that there will be no GST. There is one more step. If it is not goods, we have to check whether it will fall under services. Okay, but currently they are telling that securities are not goods. Then money is not goods. Sir, what is the meaning of the term money? We'll generally get a doubt. No, what is the meaning of the term money? So money means, they have defined it. Money means Indian legal tender money. Indian legal tender money, Indian currency which is currently in circulation. So that Indian legal tender money will be falling under money definition. Not just that, foreign currency will also fall under money definition. Check, promissory note, bill of exchange, letter of credit, draft, pay order, traveling check, money order, post or all electronic remittances, or any other instrument recognized by RBI when used as a consideration to settle an obligation or exchange with the legal tender money. So what they're trying to say here, any instrument, if I have to put it in one simple line, Indian currency, foreign currency, or any other instrument like check or bank draft, demand order. So any other instrument which is recognized by the RBI which can be used as a settlement for consideration, all that will fall under money definition. And however, they say one point here at the end of that money definition, but shall not include any currency that is held for its numismatic value. If you are holding any currency, not for the purpose of circulation, but if you are holding that currency for the purpose of its numismatic value, sir, what is numismatic value? For its intrinsic value, if you are keeping it, not for circulation, not for settling it, but if you are keeping some currency for its numismatic value, that will not fall under money definition. Sir, what exactly is the meaning of currency held for its numismatic value? Let us say, for example, I'm a coin collector. I am having one coin, one old coin which used to be in circulation during British rule in India. When the British are ruling, at that point of time also they used to use some kind of currency, right, for the purpose of settlement and all. I have one such coin which used to be in circulation during the British rule. So that I am holding it because I am a coin collector. I am not holding it so that I can use it for consideration. I can use it for settlement. No. Why I am keeping that value? Because it is having some numismatic value. It is having some intrinsic value. Sometimes this old coins and all will fetch lakhs and lakhs of rupees for persons. So that currency which is belonging to British rule, which I am holding for its numismatic value, will it fall under money definition? No. Why? Because they have specifically told money shall not include any currency that is held for its numismatic value. That will not fall under money definition. So this currency, this British rule related currency which I am holding it, that is not falling under money definition. If it is not falling under money definition, can it fall under goods? Yes. Able to understand the logic here. They told that goods means other than money. If something is not money, that will fall under goods. No. So they are saying currency held for its numismatic value is not money. If currency held for its numismatic value is not money, that means that could fall under goods definition. Agreed with it? Right. So what we are seeing now, goods, we are understanding. What is the meaning of the term goods? Goods means what? Every kind of mobile property other than money and securities. Money and securities will never be considered as goods. Now let me tell you well in advance, even money and securities will not be considered as services also. Even money and securities will not be considered as services also. So if you read this point in the services definition, anything other than goods, money and securities. So now the point here is money and securities are neither goods nor services. Money and securities are neither goods nor services. So if they are neither goods nor services, they will be kept outside of the GST purview. Because for imposing the GST, first there must be goods or services. If I am eliminating something from the goods or services definition only, that means government doesn't want to impose a GST on it. So money and securities are neither goods nor services. They are outside of the GST purview. Okay, so let us come back to the goods definition here once again. So goods means every kind of movable property other than money and securities, but it includes actionable claims. It includes what? Specifically, they are including in the goods definition actionable claim. Actionable claims also will form part of goods definition. Sir, what is an actionable claim? Basically, if I have to put it in very simple terms, if you have any unsecured debt, let us say for example, I have arrears of rent which I am required to collect. I have a property, I have given that property on rent, I have arrears of rent which I am required to collect. So you have a right to recover that rent, no? That I call it as actionable claim. So a right to an unsecured debt or a right to an beneficial interest or a beneficial interest in a movable property which is currently not in your possession. I don't want to go into the technical details. Just I want you to remember that even actionable claims also will fall under goods definition. Like for example, if I put actionable, if I give you more examples of actionable claim, lottery, betting, gambling. So all this also will fall under actionable claims only. Whatever it is, they have defined the term goods in such a manner that, and in the definition of goods, they have specifically made us include actionable claims. So that's why actionable claims also will fall under goods definition. So this unsecured debts, lottery, betting, gambling, all this will fall under actionable claims and they will be considered as goods. Next, they did not stop it here. Even they're specifically including certain extra items in the goods. Growing crops, grass, and things attached to or forming part of the land, which are agreed to be severed, which are agreed to be cut before supply or under a contract of supply. So now they are specifically including it in the goods definition. Growing grass, crops, which are attached to the earth. Sir, just now you told that is an immovable property. Things which are permanently attached to or fastened to the earth, that is an immovable property. If it is an immovable property, it will not fall under goods definition. But here what they are saying is even growing grass, crops will also be considered as goods if they are agreed to be severed. Severed means what? If they are agreed to be cut either before making supply or under a contract of supply. Before making supply or under a contract of supply, if they are agreed to be cut before making supply or under a contract of supply, then we will treat them as goods. Let us take for example this Pushpa. I am going to sell this red sandalwood. I have to sell the red sandalwood. See, this red sandalwood is a tree which is permanently attached to the earth. That is actually an immovable property. But Pushpa, how he will sell that red sandalwood? He will agree to cut that red sandalwood trunk from the land and then he will agree to supply it. Now it will become goods because it is agreed to be severed, agreed to be cut either before supply or under a contract of supply. Able to understand? So this is what the goods definition which you have to remember it. So tell me, what is the meaning of the goods? Goods means every kind of movable property other than money, other than securities. That means money and securities will not fall under goods definition. What is specifically included in the goods definition? It includes actionable claims, growing grass, crops, or things which are attached to or forming part of the land, which are agreed to be severed, which are agreed to be separated, which are agreed to be cut before making supply, that or under a contract of supply, that will fall under goods definition. And one important point to note here, currency which is held for its numismatic value, it is not money. If it is not money, then it will fall under goods definition. Okay, right. So this is what regarding goods. So we have understood what is the meaning of the goods. Now we have to understand what is the meaning of the term services. Services have been defined in a very simple manner. What they have told is anything other than goods, money and securities. Money and securities will not be considered as services. It will not be considered as goods also. But here the most interesting part of the definition is they have told anything other than goods. If something is not falling under goods definition, then they can come and fall under services. If something is not falling under goods definition, then it can come and fall under services other than money and securities. Let us say, for example, I am teaching you this class. Let us say I am taking some money from you and I am teaching the class. Is it a movable property? No. Anyhow, it is not money and securities also. Is it an actionable claim? No. It is something. Is it something attached to the earth which is agreed to be severed? No. So the activity which I am doing to you, the teaching by way of for which I am receiving consideration from you, it is not falling under goods definition. Sir, if it is not falling under goods definition, am I not required to pay the GST? No, if it is not falling under goods definition, it can come under services. Why? Because they have defined services in a very comprehensive manner. They added one simple line: anything which is not goods, all of that will fall under services. Very broader term, my dear students. It is having serious consequences. So if something is not falling under goods definition, it can come and fall under services, and government can come and impose GST provided if they are getting supplied. So whatever it is, something other than or anything other than goods, money and securities. So money and securities, once again on this money and securities, we have to elaborate it. They have told that money and securities is not goods. Now they are saying that money and securities is not even services also. But specifically, they have included certain activities relating to money. They have included certain activities relating to securities under the services definition. Sir, what are you trying to say? See, what I'm trying to say here is, let us say, for example, there is a person, Mr. A, and there is his friend B. A gave Mr. B 10,000 rupees. A gave Mr. B 10,000 rupees. This person, Mr. B, is in need of funds. He approached his friend and asked, boss, I want money for use. Now A, out of kind heart, what he has done is, no issue, I have excess money, please do use it. Now this person used the money, and thereafter, once he got back the money, he returned that 10,000 rupees money back to Mr. A. Now you tell me, on that will GST come? No. First of all, it is not goods only. What is happening here? What is the thing which is getting exchanged between the two parties is money. So money is neither goods nor services. No. So this is outside of the GST purview. But let us say, for example, A gave 10,000 rupees of money for use to another person, Mr. B. Now, with the agreement that this Mr. B, after his use is over, he is required to return back that money along with that 10,000 rupees. Along with that, he is also required to pay some interest of 1,000 rupees. Along with that, he is required to pay some interest of 1,000 rupees. Now they say that this 1,000 rupees will be considered as supply of service. This 1,000 rupees will be considered as supply of service, which means activities relating to use of money for which a separate consideration, if you are charging, that separate consideration component will be considered as supply of services. If you are giving money for use to another person, and if you are getting that money back after that use is over without charging any separate consideration, just you are giving some amount, you are getting back the same amount. You are not charging anything extra for the purpose of giving that money for use. It was not at all a supply. But in case if you are giving money for use and for which you are getting separate consideration in the form of interest or discount, that separate consideration component will be considered as supply of service. Supply of service. Not just that, if you are providing any activity in which money is getting converted in one form to another form, or money is getting converted from one currency to another currency, or if it is getting converted from one denomination to another denomination, for which you are charging a separate consideration, that separate consideration also will be considered as supply of services. If money is getting converted from one form to another form, one currency to another currency, one denomination to another denomination, for which important rule here is there must be a separate consideration for that conversion, then it will be considered as supply of services. Let me put it like this. Let us say I have 1 lakh rupees. I needed DD for this amount. I went to the bank. I gave that 1 lakh rupees of cash. In return, bank gave me DD. Both are money only. Just now, as I have told, Indian currency is also money. This demand draft is also money. So I am converting my money, my physical cash, into DD, for which bank will charge a separate consideration. Bank will collect some charges. No, let us say bank told, okay, we will give you DD. They took 1 lakh rupees, gave me 1 lakh rupees of DD. For conversion of this DD, for conversion of the money into DD, they are collecting from me 200 rupees. So now this 200 rupees separate consideration for conversion of money from one form to another form, this 200 rupees will be considered as supply of service. Not just that. If I'm converting my money from one currency to another currency, let us say, for example, I went to authorized money dealer, forex dealer. I have 1 lakh rupees of INR. I took that INR, gave it to the dealer, and in return, I got US dollars. So he is taking my Indian currency and giving foreign currency, converting money from one currency to another currency. But he will not do it for free of cost. He will charge some little extra consideration for me in the form of commission. No. So that will be considered as supply of service. Similarly, if I am changing the currency from one denomination to another denomination, let us say, for example, I have 500 rupee notes. I took it to another person and I am converting that 500 rupee notes into 10 rupee notes of equal amount. for which he is charging me separate conversion charges. That separate conversion charges will become supply of service. Able to understand? So money in itself is neither goods nor services, but activities relating to use of money, but activities relating to conversion of money from one form to another form, from one currency to another currency, from one denomination to another denomination, for which a separate consideration is getting charged. That separate consideration amount will be considered as supply of service. Understood? Clear and comfortable? Next. Coming to the next point regarding securities. Let us say I am a person who wants to buy shares. There is another person, I am a buyer of shares, another person is seller of shares. We wanted to deal in Reliance Industries Limited shares. So I purchased 1000 quantity of Reliance Industries shares. I purchased 1000 quantity of Reliance Industries shares from another person, for which I paid him some consideration. Let us say 1000 shares I have purchased, each share 100 rupees, 1 lakh rupees I have paid, and I have purchased 1000 quantity of Reliance shares. Now this is a transaction securities. This is a transaction securities. I told securities is neither goods, not even services. On this GST should not come 100%. On this 1 lakh rupees GST will not come. But you all are aware, like this the share market transaction will not happen. In between there will be someone called intermediary. Who is that intermediary, sir? There will be a stockbroker. Let us say that stockbroker is Zerodha here. Zerodha is a stockbroker. Through the stockbroker, this purchase and sale of securities will happen, no? So now the transaction securities amounting to 1 lakh has happened. For facilitating this transaction, for arranging this transaction, for connecting this buyer and seller, Zerodha will charge from you some commission. Brokerage commission, you say, brokerage, you say, something this Zerodha will collect from you. For what purpose? For facilitating this transaction, for arranging this transaction in securities, for which they are charging the commission in the form of commission, brokerage, etc. So that will be subjected to GST. Let us say on this transaction, Zerodha is charging some 100 rupees of brokerage or commission. Now this 100 rupees will be considered as supply of services. Clear? So this is very important point here. So if you see, services means anything other than goods, money and securities, but specifically they are including certain activities in the services definition. What is that? It includes activities relating to use of money or conversion from one form, conversion by cash or any other mode from one form, currency or denomination to another form, currency or denomination, for which you are charging a separate consideration. Similarly, they have added one explanation. Services includes facilitating or arranging transactions in securities. If someone is providing the services of facilitating or arranging the transactions in securities, generally who will do this? Who will do this is stockbrokers will do it. Their services will become taxable. Their services will be treated as supply of services. Understood? So we have covered various definitions. We have understood what is the meaning of the term goods, what is the meaning of the term services, and various connected provisions with that. Okay, right. So if you come back to the context, if I provide you the context once again, so what we are discussing, we are actually supposed to discuss supply. Why we are supposed to discuss supply? Because if we look at the definition of the GST as per constitution, they are saying that GST is a tax. Tax on what? Tax on supply. Of what? Goods or services or both. So we got the clarity now. What is good? What is service? We got the clarity now. So first, the subject matter of the transaction should either fall under goods or services. Then only there will be GST. But just having the goods or services alone will not be enough. There should be a taxable event called supply should have taken place. Just having the goods and services will not trigger the GST. Something should have taken place regarding that goods or services. Some taxable event should have taken place regarding that goods or services. And that taxable event is none other than supply. Supply of the goods or services should have taken place. Then only GST will be imposed. But now comes a $1 million question. Sir, when an activity will be considered as supply? When an activity will be considered as supply. Okay, sir, understood. There must be goods, there must be services. We got the clarity. But you are saying just having the goods or services alone will not be enough. There must be a taxable event called supply should have taken place. So how to determine when an activity will fall under supply definition? So to know that, we have to cover the provisions of section number 7. So section number 7 has clearly told us different circumstances when an activity will be considered as supply. When an activity will be considered as supply, when an activity will not be considered as supply. So that comprehensive discussion has been given under section number 7. So if we have to know when an activity is supply, when it is not a supply, we have to go through the provisions of section number 7. First, I will tell you structure of section number 7. So if you see here, we have section 7, subsection 1. So in section 7 subsection 1 we have various clauses, clause A, clause AA, clause B, clause C, like that we have various activities. So under section 7 subsection 1 they have clarified us when an activity will be classified as supply. So there are certain activities which will qualify as supply under section 7 subsection 1 clause A. There are some activities which will qualify as supply under section 7 subsection 1 clause AA. There are certain activities which will qualify as supply under section 7 subsection 1 clause B. There are certain activities which will qualify as supply under section 7 subsection 1 clause C. So whatever it is, section 7 subsection 1 will tell us when an activity will qualify as supply. Then we have section 7 subsection 1A, which says that once an activity has been classified as supply, the next question will come, will it be treated as supply of goods or will it be treated as supply of services? Once an activity has been classified as supply, whether it will fall under supply of goods or will it fall under supply of services, that question will come. That has been clarified by 7.1a. It has been clarified by 7.1a. So once an activity has been classified as supply, whether it will be falling under supply of goods or supply of services. Thereafter, we have something called section 7 subsection 2, which will say it is something I call it as negative list. It is something I call it as what? Negative list. That means even though in some circumstances all the conditions are getting fulfilled, but in under section 7 subsection 2 they have told us that there are certain activities which will neither be considered as supply of goods, not even it will be considered as supply of services. Which means government wants to keep some activities outside of the GST purview. Government wants to keep some activities outside of the GST purview. So that's why what they have told is they have identified a few activities and they told that these activities will not treat them as either supply of goods or supply of services. We don't want GST on it. So that is what mentioned under 7 subsection 2. So if we could complete the 7 subsection 1, 7 subsection 1a, 7 subsection 2, we would have completed the supply activity. Okay, so let us try to understand one by one. First, I will start with section 7 subsection 1, which is talking about when an activity will be considered as supply. Okay, so when what is included in the supply definition, what is included in the supply definition, we'll try to understand. One by one, we'll try to do. So first, section 7 subsection 1 clause A. It says that in order to qualify as supply under section 7 subsection 1 clause A, there must be either goods or services or both, and some form of supply should have taken place. Some form of supply should have taken place, and there must be consideration. What must be there? There must be consideration, and it must be in the course or furtherance of business. It must be in the course or furtherance of business. Then an activity will qualify as supply. So under section 7 subsection 1 clause A, you have to mug it up, my dear students. You have to apply the concept here and you have to learn it. So under section 7 subsection 1 clause A, when an activity will be qualified as supply, 4 things. There must be goods, there must be services or both, and some form of supply should have taken place. There must be a consideration, and it must be in the course or furtherance of the business. When all these 4 conditions are there, when all these 4 essential requirements are there, then it will qualify as supply under section 7 subsection 1 clause A. Repeat everyone, what and all are essential in order to qualify as supply under section 7 subsection 1 clause A. There must be goods or services or both, and some form of supply should have taken place. There must be a consideration. It must be in the course or furtherance of the business. Now let us try to elaborate it. So what is goods? What is services? We have already understood. The subject matter of the transaction must be either goods or services. And just having the goods or services alone will not be enough. Some form of supply should have taken place. Sir, what could be different forms of supply? What could be different forms of supply, sir? Supply could happen in different forms. There could be different forms of supply. Sir, what and all are the different forms of supply? The list is there here. It could be sale. It could be sale. Like if I'm a shopkeeper, one day a customer came to my shop and he asked me to sell one product. So I took the money and sold him. What do you mean by sale? Transfer of property. I have transferred the ownership to the another person. So sale could be a form of supply, or it could be a transfer. I'm not doing a sale, but instead I'm doing a transfer. Transfer also could be a form of supply. Sir, what do you mean by transfer? Let us say, for example, from the factory, the goods are getting transported to sales depot. From the sales depot, they are getting transported to another branch. So that I call it as transfer. Transfer also could be a form of supply. Or it could be a barter transaction. Sir, what is barter transaction? So I am supplying some goods. In return, I am getting some goods. So goods for goods or goods for services, services for services. So it could be a barter transaction. Or even it could be an exchange transaction. Sir, what is an exchange? Exchange is such a transaction where some monetary consideration is involved, some non-monetary consideration is involved. Let us say, for example, I'm buying a brand new iPhone. In return, I'm paying some 10,000 rupees along with my older version of the iPhone. It is an exchange. So the difference between barter and exchange is, in case of barter, there is no monetary consideration. It is simply exchange of the goods and services. But in case of exchange, it involves monetary as well as non-monetary consideration, like sale of this mobile phones and all, where I buy a new phone. In return, I will give my old mobile phone and also I will pay some monetary consideration. So it could be an exchange, or even it could be a license. Like government will give you license. Let us say I want to carry out the mining business. If I want to carry out the mining business, just like that, I can't find a mountain and I start digging it. First, I have to apply for license to the government. Government will ask me to pay some amount and they will grant me license. A license is also a form of supply. It could be a rental. Let us say, for example, immobile property is there. I want to use it. I want to take it on rent. That could be a form of supply. Or it could be lease, or even it could be a disposal. So some form of supply should have taken place. Any of this form is accepted. And it is not a full and final list. It is not a conclusive list. It is just an illustrative list. So these kind of any form of supply should have taken place. So once again, if you come back to section 7 subsection 1 clause A, in order to qualify a supply under section 7 subsection 1 clause A, there must be first goods or services or both. Some form of supply should have taken place. Just now, as we have seen, what could be different forms of supply. But just having the goods or services or both and having some form of supply alone will not be enough. The third most important essential element in order to qualify a supply is there must be a consideration. What must be there? Consideration must be there. Sir, what is consideration? Something in return must be there. Something in return. Sir, there must be a consideration, sir. If there is no consideration, if I'm not getting anything in return, then it cannot be qualified as supply. If it can't qualify as supply under section 7 subsection 1 clause A, it might get qualified as supply under other clauses. But for clause 1, section 7 subsection 1 clause A, in order to qualify as supply, there must be a consideration. Sir, what do you mean by consideration? Consideration means only money? No. Consideration need not be only in terms of money. Consideration could be a non-monetary consideration also. Let us say I am teaching you. I am required to get some consideration. You are paying me some 5,000 rupees for teaching. Consideration is there. You are not teaching me. Let us say, for example, you are not paying me. Let us say you are saying, sir, you teach me. This premises you want know for teaching. I own this premises. You use this premises and you teach me. I want to conduct a class here. I am looking for premises. One student came and told, sir, I will do one thing. I have one premises. This premises you use it and you teach. In return, I will not pay you fees for your class. This is also a consideration. Sir, I did not get money. No. But you are getting a non-monetary consideration. No. Acceptable. And even monetary value of doing an act or forbearing from an act is also a consideration. If I am doing some activity, in return, the person has agreed to do something for me, or in return, the person has agreed not to do something, that also can fall under consideration. So don't be of a wrong notion that when I say consideration, I am talking about monetary consideration. Not necessary. Consideration could be monetary consideration. It could be non-monetary consideration. It could be doing an act. It could be not doing an act also. And one more thing you have to remember it here. Consideration need not always flow only from recipient. Consideration can come from other person also. Consideration can come from another person also. Let us say I am teaching you the class. You are the recipient. I am teaching you the class. You might be listening to the class. I might not get the consideration from you. Your parent is paying me the consideration. Sir, will that also be a consideration? Yes. Consideration need not get from the recipient. We can get it from other people also on behalf of the recipient. Understood? So there must be consideration. If there is no consideration, sir, if there is no consideration, it will not qualify as supply under section 7 subsection 1 clause A. There must be consideration. Now, let us try to observe from the consideration perspective. Let me give you a few circulars here. See, there will be charitable institutions, no? There will be charitable institution. Let us say, for example, one temple is there. Charitable and religious institute. There is one donor. He gave some 10,000 rupees of donation. He gave some 10,000 rupees of donation to that temple. So, temple is receiving 10,000 rupees of donation. You tell me, will it qualify as supply? You tell me, will it qualify as supply? Or let me put it this way. Is there a consideration here? Is there a quid pro quo here? No, there is no quid pro quo here. Why? Because if you see, temple is getting 10,000 rupees. Temple is getting 10,000 rupees, agreed. But what this person is getting in return? What this donor is getting in return? Is nothing. He's getting nothing in return. You might say, sir, he's getting punyam. No, sir. How can you say a person is giving a donation to a charitable place or religious place? Is he not getting anything? Sir, you are very wrong, sir. So if I give donation to a temple, church, or a mosque, I'm getting so much in return, sir. You can't say my money is waste. No, boss. I'm not saying your money is waste. Don't take me wrong. But you might say, sir, I'm giving donation. I will get punyam. Show that punyam, yaar. How you can show that punyam? Is it tangible? It is something which you will get it after you have left this world. See, all this we can't prove it. No. So that's why this temple is getting 10,000. But what this person is getting in return? Nothing he is getting in return. So you tell me, on that 10,000 rupees of consideration which a temple has collected, are they required to collect GST also? Not required. There is no consideration here. It will not qualify as supply under section 7 subsection 1 clause A. One more, let me extend. See, this person has given donation of 10,000 rupees. This, using that 10,000 rupees, let us say this temple has purchased one equipment. Let us say they have installed one water purifier. They have installed one water purifier in the temple on the basis of donation given by that person. On that water purifier, they have written donated by so and so person, Mr. A. So like that they have written as a kind gesture. They have recorded, they have mentioned that name, they have engraved that name. This water purifier is donated by so and so person. Now, can the department say, hey, temple is getting 10,000 and as a kind gesture, they are mentioning your name on the water purifier. So every devotee will read it and they will get to know about this person. So they are providing advertisement. This person is getting advertisement in return. Is it a valid argument? Once again, no. Once again, no. This is also not a quid pro quo. Just mentioning the name of the person on the donated item is not considered as quid pro quo. That also will not qualify as supply. Let me tell you one more thing. This person has given 10,000 rupees of donation because this donation is going to be used for one festival. This temple is conducting an event. For that event, they are going to use that 10,000 rupees of money. So now in return, what the temple has done is, throughout that event, at various places, they have placed some big banners. On that banners, it was written, donated by so and so person, Mr. A, who is the owner of so and so furniture store, which is the largest furniture store in this locality. Like that, they have kept big banners. In the banners, they have not just mentioned the name, donated by so and so person. They did not mention just his name. They are mentioning his business name also. Will it lead to advertisement? Yes, it will lead to advertisement. Here he is getting something in return. Here there is a quid pro quo. Temple is getting donation and this person is getting an advertisement service in return. Then the temple will be required to collect on this 10,000 rupees along with the GST also they are required to collect it. Understood? Clear and comfortable, everybody? So in case of donations, whether there is a consideration or not, it depends on in return what the other person is getting. So one thumb rule you have to remember here: if the donor is just getting one small acknowledgement by way of mentioning his name on the donated items, that will not be considered as quid pro quo. It will not fall under supply definition. Okay, so this is one circular. Okay, I have explained that circular. Now there is one more circular there. Right. So the second point, this also I will try to tell you. Artworks sent by artist to galleries. Sir, what is it? Let us say I'm a very famous artist. I drew one excellent painting. I took a canvas. I took one paint brush. I just like that splashed some colors on that canvas. It became an excellent painting. So now what I have done is this painting I have to sell. Just like that, if I keep that painting in my home, no one will come and buy it. I am not some Picasso or someone. So what I have done, I draw one painting. Now I have to sell this. What I have to do, if I have to sell, what I have to do is there will be an art gallery. So these art galleries will conduct an exhibition. So where these artists will send their paintings and those paintings will be displayed at the exhibition. So there will be an exhibition. So on that exhibition, I will send my painting. Now this painting will be displayed at that art gallery. For this, I will not get anything in return. So I sent my artwork to the art gallery where they will display it. Will I get anything just for sending my exhibition, just for sending my painting to the art gallery? No. Just for sending that painting to the art gallery for exhibition, you are not going to get any consideration. This activity is not supply. If I am sending my artwork to the gallery for exhibition, that is not supply. But let us say, for example, at the art gallery, my painting was exhibited. Now people started walking in. The visitors will be there who will come and watch that artwork. Now one visitor has liked my artwork and he purchased that. One visitor came to that art exhibition. He liked my painting. He paid me some 1 lakh rupees and he purchased it. Now, did the supply take place? Yes. Here is the place where supply has taken place. Here is the supply. Here is the place where supply has taken place. Just sending the artwork to the art galleries for exhibition, it is not supply. But at that art galleries, if a customer walks in and he likes a painting, paid the consideration and purchased it, at that point of time, supply will take place. Understood? So this is what one more circular here. We have one more circular regarding no claim bonus. I will come back to that later. But two circulars are associated with the consideration. Those two circulars we have covered. Okay, right. So once again, to provide you the context, what we are actually discussing section number 7, subsection 1. We are listing out various activities where an activity will be considered as supply. So first we are at section 7, subsection 1, clause A, which says that in order to qualify as supply, there are some essential requirements which must be there under section 7, subsection 1, clause A. What are they? First, there must be goods or services or both. There must be some form of supply. There must be consideration. Last one more essential requirement in order to qualify as supply under section 7, subsection 1, clause A is it must be in the course or furtherance of business. It must be in the course or furtherance of business. Whatever activity you are doing, whatever supply you are doing, that too for a consideration, it must be in the course or furtherance of business. Now you will get a doubt, sir, what is the meaning of the term business? The term business is very much wider. The term business has been defined in a very much wider manner. It includes so many activities. Like what, sir? It includes any trade, commerce, manufacture, profession, vocation, adventure, wager. Everything will get covered here. Any activity in connection with or incidental to A above. So any trade you are doing, any commerce you are doing, any manufacture you are doing, that is business. In relation to that, if you are doing any supplementary activity, any incidental activity, any ancillary activity, that will also fall under business definition. Then any activity similar to, irrespective of volume, frequency and continuity, whether you are doing it only once in a year, doesn't matter, irrespective of volume, frequency, continuity, that will be considered as business. Supply or acquisition of goods, including capital assets and services in connection with commencement or closure of the business. You are about to start business, but for that business you want to procure assets. You did not start the business yet. To start the business, you are procuring the asset. It will be treated as business. You have closed down your business. Your business is closed. Now you are selling all your assets. Business. That will also be considered as business activity. Provision of a club, association, society or any such body, like clubs we have, these clubhouses we have, where you become a member, you pay them the consideration, they will give you access to the club, you can go and enjoy the recreational activities. Business. Admission for a consideration of a person to any premises, amusement park, movie theater, you pay the money, they allow you to enter inside that premises. Business. Services supplied by a person holding an office in the course or furtherance of a trade, profession or vocation. I am a chartered accountant. I am holding a position of a director. I am holding a position as a director of a company. It is also a business. Activities of a race club, including by way of a totalizer, licensee to bookmaker or activities of a licensed bookmaker in such a club. Even this horse racing activities and all, it is also an business. Any activity, transaction undertaken by central government, state government or even local authorities, even whatever services which are provided by central government, like I have told, giving telecom license, giving spectrum license, state governments giving mining license, state governments giving alcoholic liquor license, local authorities granting you some licenses, granting you trade license, even the activities performed by central government, state government, local authority as public authorities, they will also fall under business definition. So for any trade, commerce or any other similar activity to qualify as business, frequency, volume, continuity or regularity of such a transaction is not a prerequisite. Like let's say for example, I'm an artist. I draw once in 3 years one painting. I will draw a painting once in 3 years and that I will sell it. Sir, will that be considered as business? Yes. Sir, I'm not doing it regularly. No. Once in a while you are doing, no, business only. That will fall under business definition. So it must be in the course or furtherance of the business. Let us say for example, there is one old lady. So that old lady, she is unable to meet her expenses. Her kids are not taking care of her. So what she has done is she is having some old jewelry. She took that jewelry and sold it because she has to take care of her needs. No. So that old lady took the jewelry, sold it for some 1 lakh rupees. She sold her old jewelry and took that 1 lakh rupees. She sold the jewelry. Goods, jewelry is a good. Some form of supply has taken place. Supply is there. Consideration is also there. She sold the jewelry, got 1 lakh rupees. Is it in the course or furtherance of the business? Is it her course or furtherance of the business? No. No, that is not in the course or furtherance of the business. On that GST will not come. That activity will not qualify as supply under section 7 subsection 1 clause A. That activity will not qualify as supply. Okay. Number two, let us say if Joy Lucas is doing it, if Joy Lucas is selling the jewelry and for which they are receiving consideration, can it be called as supply? Yes, because it is in the course or furtherance of business. Let us say you are a salaried employee, you purchased one car. You purchased a car for your daily commute and all, you purchased a car. After some number of years, your car has become worn out. That car you are selling. That car you are selling. So will that be considered as in the course or furtherance of business? No. No, it is not in the course or furtherance of the business because it is not your business activity. No, right? So if second-hand car dealer sells it, if there is a second-hand car dealer who will buy the used cars and sell it to another person, will that be in the course or furtherance of the business? Yes, that will be in the course or furtherance of the business. So like that, an activity in order to qualify as supply under section 7 subsection 1 clause A, it must be in the course or furtherance of the business. Sir, I am a business person. I have purchased all the assets. My business has been closed out. I am selling all my assets, sir. Whatever pending assets, whatever left out assets are there that I am selling, sir. Is that also in the course or furtherance of business? Yes, that will also be in the course or furtherance of the business. Understood? So this you have to understand it. So in order to qualify as supply under section 7 subsection 1 clause A, it must be in the course or furtherance of the business. Understood? That's all here. This is what regarding section 7 subsection 1 clause A. What does that say? In order to qualify supply under section 7 subsection 1 clause A, there must be goods or services or both. There should be some form of supply. There must be consideration and it must be in the course or furtherance of the business. When all these conditions are fulfilled, it will get qualified as supply under section 7 subsection 1 clause A. If it is getting qualified as supply, then the question of GST will come into picture. Okay, right. So this is what regarding section 7 subsection 1 clause A. See, this is not the only activity which will qualify as supply. There are even various other activities also which will get qualified as supply. Sir, what are other activities? Now we have section 7 subsection 1 clause AA. It says that a person other than individual, a person other than individual, if they are performing any activities, if they are performing any activities or transactions to its members or constituents, to its members or constituents. Either a person other than individual is providing the services to members or its constituents, or members or constituents are providing the services to the person. So whatever it is, anyway, either a person other than individual doing any activities or transactions to its members or constituents, or members or constituents doing some activities or transactions for the person, in return for which there is a consideration. In return for consideration. In return for consideration, this activity will qualify as supply, notwithstanding any order of the court, decree or judgment of any court. So it is an amendment actually. Section 7 subsection 1 clause, not recent amendment. It was introduced after the act has come into picture. So services provided by a person other than individual to its members or constituents, or vice versa, for which there is a consideration, it will automatically qualify as supply under section 7 subsection 1 clause AA. See, the logic behind is very simple. There was one court judgment. Previously, there used to be one court judgment. What is that court judgment is? If there is a club is created by a group of members. Club is created by a group of members. Now, what is the business of the club? These persons who become the members of the club, they will pay annual fees or monthly fees they will pay. In return, in the name of the club, they will get the services. Let us say 100 people came forward, created a club. Everybody is contributing 10,000 rupees per month. In return, in that club, they go and enjoy. So now, previously under service tax, the government told that the service tax department issued a notice that club is providing the services to its members, for which there is a consideration, you have to pay GST. Now, what this club has argued is, boss, we are not providing service to any outsider. As a club, I am providing services. To whom I am providing services? To the people who have created me. Group of people have created the club. For them only they are receiving consideration. To them only they are providing services. So this club argued that we both are one and the same. Club and members are one and the same. We are like two hands of the same person. If I am taking some 10 rupees and keeping that in my another hand, both hands belong to me only, no. So that's what this club has argued. Club and members are both one and the same. We are not different. And even they have went to the court, and in the court they have got the judgment in their favor. Court even have given the judgment that club and its constituents are both one and the same. When club is providing the services to its members, that service is not getting provided to any outsider. They both are one and the same. No service tax should be imposed on this. Like that, a court judgment was there, favoring the client there, favoring the taxpayer there. But under GST, they don't want to have this headache. they don't want to lose GST on that club related activities and all. So that's why what they have told, they have introduced this section 7 subsection 1 clause AA. They started this clause with non-obstante clause. They told notwithstanding anything contained in any court judgment or order. That means they want to override the judgment of the court, that club related judgment, whatever is there, they want to override it. And what they have told, notwithstanding anything contained in any other order of the court, decree or judgment of any court. So these two people will be treated as distinct person, a person other than individual. In our example, a club, and the people who have created it, both we will treat them as different persons only. And if any transaction is happening between them for which there is a consideration, we will treat them as two different persons, and that activity we will always treat it as supply. Whether any other court judgment is there or not, we are least bothered. These transactions will treat as supply, and on that we will impose GST, will be subjected to GST. So this is what section 7 subsection 1 clause AA. Understood? Right. Then now comes the next part. Section 7 subsection 1 clause B. There is one more activity which will get qualified as supply. So what is that is, if you are importing services, if you are importing the services for which there is a consideration, if you are importing the services for which there is a consideration, whether or not in the course or furtherance of the business. Here business condition will not become applicable. Whether or not in the course or furtherance of the business, this will get qualified as supply. This will get qualified as what? Supply. If you are importing the services and there is a consideration for that import. Sir, what is an import? First of all, what is an import is, let me put it this way. Let us say I'm a person residing in India. From abroad, let us say I'm receiving some services. I'm receiving some, let us say, advertisement services, digital advertising services I'm getting from a foreign company. A company is located in US. From them, I'm getting digital marketing services. I'm importing the services for which I'm paying consideration. Let us say I'm paying some 1 lakh rupees of consideration for importing that services. I'm importing the services for the consideration. Whether I'm importing that services for my personal purposes or for my business purposes doesn't matter. It will always get qualified as supply. So if you are importing the services for a consideration, whether or not in the course or furtherance of the business, that activity will become supply, and on that GST is payable. But here you will get a doubt. Sir, here supplier is located outside India, no? Supplier of service is located outside of India. Recipient is in India. Generally what will happen? Supplier should collect along with this 1 lakh rupees, 18,000 rupees of GST also supplier should collect. And this supplier should pay the amount of GST to which government? To the Indian government. But do you think it is possible? It is not possible. Why? Because a person is located outside of India. How the government can pressure him to pay the GST to the Indian government? Quite not possible, no. So that's why here we have a separate mechanism called reverse charge mechanism. So now I am introducing you to one more concept under GST. So under GST, there are two mechanisms for collection of GST by the government. One is forward charge mechanism, other one is reverse charge mechanism. See, what is the usual forward charge mechanism is, which we experience in our day-to-day life. We go to shop, we go to service provider, we buy some goods, we get some service. That person will ask you to pay the money along with the GST. As a recipient, we pay the GST to the supplier. Supplier will pay the GST amount to the government. This is what forward charge mechanism. But in some transactions, in some circumstances, it will be difficult for the government to collect the amount of GST from the supplier. In some circumstances, it will be very difficult for the In some circumstances, it will be difficult for the government to collect the amount of GST from the supplier. Then what they will do, they will ask the recipient only to directly to pay the GST amount to the government. So here is what RCM will come. So practically what should happen? This recipient should have paid 1 lakh along with GST to the supplier. Supplier should have paid it. But here it is difficult for the Indian government to collect the amount of GST from the foreign supplier. So that's why what they're saying here, you do one thing, RCM we will put. So what is RCM? You are a recipient, no? You are importing the services, no? For a consideration, no? We will not check whether it is in the course or furtherance of the business. So on this you have to pay GST. Sir, I am a recipient. Yes, we know you are a recipient. You pay the GST to the government directly. You pay 1 lakh rupees to the supplier. On that 1 lakh rupees, calculate the amount of GST at the applicable rate. That GST you directly pay to the government. So the government is putting the responsibility on the recipient to deposit the amount of GST directly with the government. This I call it as RCM. There are bunch of services. There are a very good number of services on which recipient will be liable to pay the amount of GST. What and all are that services where the recipient will be liable to pay the GST under reverse charge mechanism that we are going to see it in the chapter charge of GST. that we are going to see it in which chapter? In the chapter charge of GST, we are going to talk about it. But this is one such case. Import of services is one such case where the recipient will be liable to pay the GST under reverse charge mechanism. I hope you are all able to understand this. Okay, so whatever it is, section 7 subsection 1 clause B, if you are importing the services for a consideration, whether or not in the course or furtherance of the business, it will get qualified as supply. Next, we have section 7 subsection 1 clause C. There are few more activities which will become supply under section 7 subsection 1 clause C. So what are that few more activities is? Deemed supply, I call it. I call them as deemed supply. And what is a deemed supply is, there are certain activities which are specified under schedule 1. There are some activities which are specified under schedule 1. In total, 4 activities are specified. How many? In schedule 1, there are 4 activities which are supplied. And if these 4 activities which are mentioned under schedule 1, if they are supplied, even without consideration, if these activities are getting supplied, still we will deem it as supply. And on that, government want to impose GST. So deemed supply, section 7 subsection 1 clause C. Under section 7 subsection 1 clause C, they have mentioned that there are certain activities which are mentioned in schedule 1. There are 4 activities which are mentioned in schedule 1. These 4 activities, even if you are doing it without consideration, even if there is no consideration involved in that 4 activities mentioned under schedule 1, still we will deem it as supply. See, if you pay close attention in all the above clauses, whether you take section 7 subsection 1 clause A, or you take section 7 subsection 1 clause AA, or even you take 7 subsection 1 clause B, in all the cases consideration is must. Pay here, see here, if you want you can check. So section 7 subsection 1 clause A, I told that consideration is required. Section 7 subsection 1 clause A, I told here also consideration is required. Even in section 7 subsection 1 clause B, here also I told consideration is required. But in section 7 subsection 1 clause C, they are telling that we will mention some activities, and those activities are actually mentioned in schedule 1. And even if these transactions are done without consideration, we will qualify it as supply. It will become supply. It will be deemed as supply, and on that we want to impose GST. That's what the government is saying. Now you will get a doubt, sir, what are that activities which are mentioned in the schedule 1? You told 4 activities are there. So what are that 4 activities which are mentioned in the schedule 1, which will be deemed as supply even if done without consideration? So to learn that, we have to go to schedule 1. So let us go to now schedule 1 and try to understand what are that 4 activities which will be deemed as supply even if done without consideration. Number 1, para number 1. Permanent transfer or disposal of a business asset on which ITC has been availed. First activity which will be deemed as supply even without consideration is permanent transfer or disposal of a business asset. Let us say I am a registered person. Okay, I have one business asset. So when I say business asset here, I am not just referring to only capital assets. Even stock is also my business asset. When I say business asset, even stock is also my business asset, whether current assets or fixed assets, whatever it is. If there is a business asset on which I have availed input tax credit, I purchased a business asset on which I have availed input tax credit. Thereafter, I am permanently transferring or disposing of that business asset without consideration. Still, it will be deemed as supply. I will give you one simple example. Let us say, for example, I am a registered person. I purchased one laptop. Let us say 1 lakh worth of laptop I have purchased. On that, I have paid 18,000 rupees of GST also. And on this laptop, when I purchased it, I even took the input tax credit. I availed input tax credit of 18,000 rupees. Thereafter, this laptop, I am giving it free of cost. Permanently transferring. I'm not doing temporary transfer. I'm permanently transferring the business asset. Permanently, on a permanent basis, I'm transferring that business asset. One day, one friend came to me and told, boss, I need a laptop. I told, okay, I know this friend very much. And also this laptop has become outdated. It is no longer fitting my purpose. So what I have thought is, let me do one thing. This laptop, I will give it to you. Since he's my close friend, I can't ask any consideration from them. No, I can't ask any consideration from them. So I permanently transferred or disposed of that business asset without any consideration. If it is no consideration, it will not qualify as supply under clause A, clause AA, clause B. But still, since this is an activity mentioned under schedule 1, so this will qualify as supply under section 7 subsection 1 clause A and clause C, on that it will be treated as supply, on that GST will be payable. Now a question you will get, sir, how will I calculate the amount of GST, sir? There is no consideration only. No. there is no consideration, on what value I will pay GST? That is altogether a different issue that we will try to learn it at the CA final level. So we have valuation rules applicable. So according to the valuation rules, we will determine what is the value. Even if there is no consideration, using some rules will determine what is the value, and on that value we will make this person liable to make the payment of GST. How to determine the value and all, you keep it aside, but GST will come here. Understood? Clear? So what is the first activity which will be deemed as supply even if done without consideration? Permanent transfer or disposal of a business asset on which ITC is availed. Then it will be deemed as supply even if transferred without consideration. Now few things you have to keep it in here in mind. Only those assets on which ITC has been availed. Only those business assets on which ITC is availed, if they are getting permanently transferred without consideration, then only it will qualify as supply. Which means if I'm permanently transferring or disposing a business asset on which I haven't availed input tax credit, and which I did not take input tax credit, or on which ITC is blocked, there will be certain assets on which ITC will be blocked. Let us say I purchased a car. On that car, I did not take the input tax credit. Thereafter, I am permanently transferring or disposing that car without any consideration. Will it be deemed as supply? No. Why? Because under para number 1 of schedule 1, it will be deemed as supply only when you are permanently transferring or disposing a business asset on which ITC is availed. If you have not availed ITC, if you have not availed input tax credit, or if ITC is blocked, that asset you are permanently transferring or disposing it will not be deemed to be a supply. So number 1, first condition, that should be such a business asset on which you should have availed input tax credit. Number 2, the transfer should be permanent. Transfer or disposal must be permanent. It should not be temporary. If it is a temporary transfer or disposal, once again, it will not be deemed as supply. So this is what para number 1 of schedule 1. Clear everyone? Right. So let us come to the next part. Second activity which will be deemed as supply, even if done without consideration. Supply between related persons or distinct persons. So supply of goods or services between related persons or between distinct persons, even if done without consideration in the course or furtherance of the business, it will be deemed to be supply. It will be deemed to be supply. But before that, first we need to understand, what do you mean by related person? Sir, who will be treated as a related person? What do you mean by distinct persons here? That terms we have to understand. Sir, when two persons are considered to be related, see, the GST Act has not given you freedom to choose who is your relative, who is not your relative. They are defining the term. They are telling there are certain relationships. These relationships, we will treat them as related. Whether you like it or not, we will deem you as a related person. And if any transaction is happening between these related persons, if any supply of goods or services is happening between related persons, even if there is no consideration, still we will deem it as supply. Sir, who are that related persons? Let us see here. So related persons under section number 15. Persons including the legal persons deemed to be related when, if they are officers or directors of one another's business. Let us say I'm a director in my friend's business. My friend is a director in my business. We both will be considered as related. So such persons are officers or directors of one another's business. They will be considered as related. Even director of a company also will be considered to be related as per the circular. But whatever it is, if you are officers or directors in one another's business, like I'm a director in my friend's business, my friend is a director in my business, we both will be considered as related. Then such persons are legally recognized partners. You both are legally recognized partners. You both are partners in a partnership firm. Then it will be considered as related. Here I am not talking about life partner. I am talking about business partner. Then such persons are employer and employee. If both are employer and employee, they will always be considered as related. A third person controls or owns or holds indirectly or directly greater than or equal to 25% of the voting stock or shares of both of them. Let us say, for example, there is A Limited, there is B Limited. There is one third person. Let us say there is one person who is holding greater than or equal to 25% of the shares in A Limited, and he is holding greater than or equal to 25% of the shares in the B Limited. Now also this A Limited and B Limited, they both will be considered as related. They are not saying this person and this person and A Limited, this person and B Limited. No, they are not saying it. If a third person owns, controls or holds greater than or equal to 25% of the voting stock or shares of both of them, then the both will be considered as related. If a third party is owning greater than or equal to 25% of the shares in both companies, both companies will be considered as related. Understood. Next, regarding control, we have 3 points. One of them controls the other. Let us say, for example, there is a company A Limited, there is a company B Limited. A Limited controls B Limited or B Limited controls A Limited. Related. A third person controls both of them. Let us say one third company C Limited is there, which is controlling both of them. Then also they will be considered as related. Or both of them collectively control a third party. A Limited, B Limited, collectively they are controlling D Limited. Then also they will be considered as related. So regarding control, we have 3 points. One of them controls the other, or a third party controls both of them, or both of them collectively control a third party. So control can happen in any of these ways. If these control conditions are existing, then they will be considered as related. Then such persons are members of the same family. Members of the same family will always be considered as related. But who is family, sir? Who is family? So, sir, along with me in my house, my brother-in-law is also staying. We both can be considered as family? No. They did not give you that freedom to decide who is your family, who is not your family. They are identifying some family relationships. They only will be considered as related. Who are they? Spouse and children. Spouse and children. My spouse, my children. They will always be deemed to be related. Whether they are dependent on me, not dependent on me, doesn't matter. Spouse and children of the person will always be considered as people of same family. Parents, grandparents, brothers and sisters of the person, if they are wholly or mainly dependent on the said person. Parents, grandparents, brothers and sisters, they will be considered as related only if they are wholly or mainly dependent on me. My parents, my grandparents, my brothers, my sisters, if they are wholly dependent on me, then only we are part of same family. Then only we are related. They are not dependent on me. Let us say, for example, I myself and I have a parent. My father is there. My father is having his own business. He is not dependent on me. Can we both be considered as related? Sir, we both stay in same house, sir. No. You both will not be considered as members of same family. Okay. So this definition you have to remember. Spouse and children. Spouse and children. It is always related. Then whether they are dependent on you or not. Parents, grandparents, brothers, sisters. They will be considered as related only when they are wholly or mainly dependent on you. Understood? So they will be considered as related persons. Okay, we have understood who is related person. Now we will try to understand what do you mean by distinct person. Very, very important concept. Distinct person. Sir, who are distinct persons? Let us say for example, I'm a person who is into business. I'm a person who is into business. Let us say for example, I'm into business of electronics. I'm into business of selling electronics. Let us say in Karnataka, I have my place of business. In Bangalore, I have one store where I will sell my electronic goods. Let us say in another place of Karnataka, in Mysore, I have another store. There also I will sell my electronic goods only. So I am a single business person. I am having multiple places of business within a same state. If I am having one branch office, one head office like that, I have multiple places of business within the same state. If I have multiple businesses within the same state, you tell me, am I required to take separate registration? Am I required to take separate registration for Bangalore and Mysore separately? The answer is no. There is no mandatory requirement. So GST Act permits that if you have multiple places of businesses within the same state or union territory, you can operate all of them under single registration. You are not required to take multiple registrations. GST department will permit you. Even whether in the same stores, in the both stores you are doing same business or different business, that doesn't matter. Let us say in the Bangalore store, I am selling electronics. In the Mysore store, I am selling garments. Not necessarily I need to take separate registration. I can operate them under single registration. But if you voluntarily come forward and say, no sir, for Bangalore, I want sorry. But if you voluntarily come forward and say, sir, for Bangalore, I want separate registration. For Mysore also, I want separate registration. Department will not say get lost. Department will grant you separate registration if required. If you are insisting, sir, I have multiple places of business in same state, sir, but for my convenience, for my business purposes, I want to take separate registration, sir. Can I take it? Yes, you can take separate registration for both of your businesses separately. But in case if you have taken separate registration, now you both will be treated as distinct persons under section number 25. In case if you have taken separate registration, you both will be treated as distinct persons. Let us say, for example, from my Bangalore store, I have transferred some stock to my Mysore store. See, both are my branches only. If I am transferring stock from one of my place of business to another place of business, will I charge any consideration? No. But here, since you have taken separate registration, you both will be treated as distinct persons. If you are doing any transfer, if you are making any supply of goods or services between distinct persons, even without any consideration, still the act will deem it as supply. And on that they will ask you to pay the GST. Sir, no consideration, no. How I will pay GST, sir? That we will determine as per valuation rules. But you will be liable to pay the GST. This activity we will deem it as supply. Understood? So if you have taken separate registration under same PAN, if there are multiple registrations under same PAN, then all that entities will be treated as distinct persons, and you are required to pay GST on supply of goods or services between distinct persons, even if done without consideration. Now, let me put it another way. Let me give you another example. Let us say I'm a business person. I have a place of business in Bangalore. I have a store in Bangalore. I also have a place of business in Chennai. So Bangalore is in Karnataka, Chennai is in Tamil Nadu. I'm having place of business in multiple states. Now can I operate this Bangalore and Chennai under same registration? Not possible. Not possible, because GST registration is state specific. You have to get separately registered with the Karnataka state government. You have to get separately registered with the Tamil Nadu state government. So in case if you are taking separate, not in case, you have to compulsorily take separate registrations here. Since these are registrations of same person, since these are two separate registrations under same PAN, this two also will be treated as distinct persons. This two also will be treated as distinct persons. If any supply of goods or services are happening between them, even without consideration, still we will deem it as supply under para number 2 of schedule 1, even if done without consideration. Okay, not just that, I will tell you one more thing here. Let us say I'm a business person. I'm having an electronics store. I'm having an electronics store in Bangalore. Okay, which is registered. Now in Chennai, I have a bar where I sell alcoholic liquor for human consumption. In Bangalore, I have an electronics store for which I have taken registration. In Chennai, I am running a bar where I am selling the alcoholic liquor for human consumption. So you tell me in Chennai, if I have a bar where I am selling alcoholic liquor for human consumption, will I get this premises registered? Not required. Why? Because you are selling alcoholic liquor for human consumption, which is outside of the GST purview. So even these two entities also will be treated as distinct persons. Or if I put it in the other way around, these two will be treated as establishments of distinct person. Let us say from my electronic store, at the bar at Chennai, I needed one TV here. Those people, my customers need entertainment. I need one TV. So what I thought is, let me do one thing. Why to buy it from outside? From my Bangalore related electronic store, I will bring one TV and place it at Chennai bar. There will be no consideration because both are my businesses only, but still these two will be treated as establishments of distinct person. If any supply of goods or services is happening even without consideration, we will deem it as supply under section 7 subsection 1 clause C, and I will be liable to pay the amount of GST. Understood? Clear and comfortable? So that is what para number 2. So supply means supply. It could be supply of goods or supply of services either between related persons or between distinct persons under section number 25. Even if done without consideration, still it will be deemed to be supply, and on that GST will be payable. Okay, right. So this is what regarding para number 2. Now let us come to one more proviso is there. So one more extra point regarding para number 2 we have to understand. See, I told that employer employee both are related. No, employer and employee both are related. Let us say employer is giving a gift to employee. Employer is giving a gift to employee. So now when employer is giving a gift to employee, generally when I say gift, there will be no consideration. No, even though there is no consideration, it is a supply of goods by employer to employee who are related persons without consideration, but still it will qualify as supply under section 7 subsection 1 clause C or not? 100%. Just now, as I've told, because of para number 2, schedule 1, supply of goods or services between related persons even without consideration will be deemed as supply. So if the employer is giving a gift to an employee, definitely there will be no consideration. Still it will be treated as supply under para number 2 of schedule 1. But here they have given relaxation. What relaxation they have given? If the employer is giving a gift to the employee up to a value of 50,000 per year per employee. Per year per employee, if they are giving the gift up to 50,000 rupees, it will not be treated as supply. It will not be treated as supply. Let us say an employer is giving a gift to his employee. He is giving one phone. He is giving one mobile phone whose value is 48,000 rupees. Whose value is 48,000 rupees. So here employer has given a gift to an employee amounting to 48,000, which is up to a value of 50,000 per employee in one financial year. So on this, it will not be treated as supply. No GST will be payable. Let us say if the employer is giving a gift to an employee of an iPhone which is 75,000 rupees. 75,000 rupees worth of mobile phone has been given as gift by employer to employee. Supply of goods between related persons without consideration. Will it be treated as supply? Yes, here we will treat as supply. Why? Because the value of the gift is more than 50,000. Okay, sir, you are treating it as supply. What will be the amount of supply here? Will it be total 75,000 or will it be only 25,000, value exceeding 50,000? Doubt you should get, no. So you are telling supply of gift by an employer to an employee up to an value of 50,000 will not be treated as supply. This is what you have mentioned. Okay, I will not treat it as supply. But if the value of the gift is exceeding 50,000 rupees, I have to treat it as supply. But what is value of supply? Entire gift value or value exceeding 50,000? Entire gift value. Entire 75,000 will be treated as supply. Entire 75,000, not just the value exceeding 50,000. Entire value will be treated as supply. Entire just 1 minute. Yeah, fine. I think there was some glitch and all. Now I think everything is okay. Fine. Yeah, so this is what I was saying. When the value of the gift is more than 50,000 rupees, the entire value of the gift will be treated as supply. Entire value will be treated as supply. So entire 75,000 will be treated as supply, and on that GST will be payable. Understood? Right. So this is what regarding para number 2 of schedule 1. Now we will go to the next paragraph, para number 3. One more activity which will be deemed as supply even if done without consideration, which is supply of goods by principal to agent or by agent to principal. Sir, what is it? So let us say, for example, there is a principal and principal is supplying the goods to an agent. Thereafter, agent will make a further supply to the ultimate customer, to a third party. There is a principal. Principal is supplying the goods to an agent and agent is making a further supply. Now, principal is supplying the goods to the agent without consideration. Principal is supplying the goods to an agent without consideration. Now they are saying that even though there is no consideration, still it will be deemed as supply. Supply of goods by a principal to the agent, even if done without consideration, will be deemed to be a supply. Now, in para number 3 of schedule 1, they are only talking about services. Para number 2 says supply of goods or services between related persons or distinct persons will be deemed to be supply. Para number 2 says between related persons or distinct persons, whether you are making supply of goods or you are making supply of services, it will be deemed to be supply. But in case of para number 3, that is between principal and agent, they will deem it as supply only for supply of goods. If there is supply of goods by principal to the agent, even if done without consideration, it will be deemed to be supply. Similarly, let us say, for example, there is an agent who is procuring the goods from the third party. Thereafter, agent is making the supply of the goods to the principal. Even without consideration, still it will be deemed to be supply. Still it will be deemed to be supply. So either supply of goods by principal to the agent or by agent to the principal, even if done without consideration, it will be deemed to be supply. But one thing here you have to remember, only those agents will get covered under para number 3 of schedule 1, those agents who are issuing the invoice in their own name. Only those agents will get covered under para number 3 of schedule 1. Sir, what do you mean by this? Principal has made a supply of goods to the agent, no? Now agent will make a further supply to the customer, no? To the customer, invoice should be given by the agent in his own name. If the principal itself is giving the invoice in his own name, then that agent will not get covered under para number 3 of schedule 1. Similarly, if you take the second case also, agent procure the goods from the third party. Thereafter, agent will make the supply to the principal, no? For this transaction, agent should give the invoice in his own name, not the supplier. So then only these agents will get covered. So very important point here, my dear students. Supply of goods only are getting covered under para number 3 of schedule 1. Only supply of goods between principal to the agent or from agent to the principal will be deemed as supply even if done without consideration. But not all agents will get covered under para number 3 of schedule 1. Which agents will get covered? Only those agents will get covered who are issuing the invoice in their own name, not on behalf of the third party or principal's name. then that activity also will be deemed as supply under para number 3 of schedule 1. Then, so we have one concept regarding del cred agent, one clarification we have regarding del cred agent that we'll try to talk about it later because it is having linkages with the value of supply chapter and all. There we'll try to see. It is having linkages with value of supply and also exemptions. This circular we'll talk about it later. Then the last activity which will be deemed as supply is para number 4 of schedule 1, which is regarding importation of services. So para number 4 of schedule 1 says that if you are importing services without consideration, but it should be from a related person, or your own establishment outside of India. Is from your own establishment outside of India, and it must be in the course or furtherance of the business. When all these conditions are satisfied, then also it will be deemed to be a supply. So if you read it here, if you are importing the services from related person or from your own establishment located outside of India, like you have a branch office outside of India, from that branch office outside of India, if you are importing the services, or from your related person, if you are importing the services, there is no consideration, sir, but it must be in the course or furtherance of business, then also it will be deemed to be supply. Sir, regarding importation, you have told one more point. Section 7, subsection 1, clause B also you have mentioned, which is also talking about importation of services. Can you do a comparative study between section 7, subsection 1, clause B and clause C? Yes. So when it comes to importation of services, whether it will fall under supply definition or will it not fall under supply definition, this we have to follow one system to decide it. Sir, what is that system? In case in the exam, if they have given you question that there is import of services, first check, is there a consideration? Yes, sir, consideration is there. Don't check for anything, whether it is in the course or furtherance of the business, from whom you are receiving. Don't check anything. It will qualify as supply. Under section 7, subsection 1, clause B. Sir, I am importing the services, but there is no consideration, sir. If there is no consideration, don't immediately conclude that it is not a supply. You need to check one more thing. If you are importing the services without consideration, then you have to check from whom you are importing the services. Are you importing the services from related person or your own establishment outside of India? That you have to check. Yes, sir. Answer is yes. Then you have to check, is it in the course or furtherance of the business? Yes, sir. Answer is yes. Then it will get qualified as supply under section 7, subsection 1, clause C. So very important, importation of services. This is where often students write the wrong answers. So that's why I'm telling you system. In case if they're asking you a question regarding importation of services, to determine whether it will qualify as supply or not, this is what the system you have to follow. First check, is that import of services is for a consideration? Yes, import of service is for a consideration. Then you have to treat it as supply under section 7, subsection 1, clause B. On the other hand, no sir, there is no consideration for that. There is no consideration for importing. Then you have to check one more thing. Is it from a related person or your own establishment outside of India? And also, is it in the course or furtherance of the business? Yes, if for these two questions you have asked, and if the answer is yes, I'm importing the services without consideration, that too from a person, from a related person or my own establishment outside of India, and also it is in the course or furtherance of my business, then it will automatically qualify as supply under section 7, subsection 1, clause C. You follow this system, you will never write the wrong answer. Understood? So this is what regarding section 7, subsection 1. We are only done with section 7, subsection 1. What is section 7, subsection 1 saying? Section 7, subsection 1 is saying which activities will be deemed to be supply. Section 7 is not over. Only section 7, subsection 1 is over. So this part is over when an activity will be treated as supply. So an activity might become supply under clause A, clause AA, or clause B, or clause C. Under any of these clauses, an activity might become supply. So if a activity falls under supply definition, then the question of GST will come into picture. Okay, section 7, subsection 1, we are done. So once an activity has been classified as supply, whether it will be treated as supply of goods or will it be treated as supply of services? The next question, once an activity has been qualified as supply, whether that activity will be considered as supply of goods or it will be considered as supply of services. The next question will come. Why the next question will come? Sir, why this classification is very important? Why? Because depending on whether it is supply of goods or supply of services, the rate of GST is going to depend on that. So that's why it is very much important for us to classify once an activity has been qualified as supply. We will go to section 7(1)(a) and we will determine whether that activity will fall under supply of goods or will it fall under supply of services. Okay. So section 7 subsection 1 clause A says that we have given schedule 2. In that schedule 2, we have specified activity and which activity will be treated as what. We have given list of activities and whether that activity will fall under supply of goods or that activity will fall under supply of services. We have given that list under schedule 2, refer schedule 2, and accordingly you classify whether that activity is supply of goods or that activity is supply of services. Now let us go to that schedule 2. So activities or transactions to be treated as supply of goods or services. Once an activity has been classified as supply, whether that will fall under supply of goods or supply of services. That guidance has been given under schedule 2. Let us see what does schedule 2 say. So schedule 2 says that if it is transfer, if there is a transfer involved in the transaction, which is what? If you are transferring the title, if you are transferring the ownership in the goods, always treated as supply of goods. On the other hand, you are not transferring the property, you are not transferring the ownership, but just you are transferring the right in goods or undivided share in goods. Let us say, for example, I am having a car. That car I am not transferring. I am not transferring the ownership. The right in the car I am transferring. That means I am giving the right to use that car for another person for 1 or 2 days in return for consideration. So if there is a only transfer of right in goods or undivided share in goods without any transfer of title, ownership is not getting transferred, just right in goods or undivided share in goods is getting transferred, that you treat as supply of services. Next, any transfer of title in goods where property ownership will pass at a future date. There is any transfer of title where ownership will get transferred at a future date. Sir, what they are referring to? Hire purchase. If you take a hire purchase transaction, ownership will get transferred at a future date on payment of full consideration. So even that hire purchase transactions also will be considered as supply of goods only. So this is how you have to classify in case if it involves transfer. Then land and building. So when it comes to land and building, sir, land and building is not goods, no? Land and building is not goods because you told that it is an immobile property. Yes, it is not goods, but it will fall under services. Why? Because what did I say? If an activity, or how the term services has been defined, anything other than goods. Something is not falling under goods definition, it will fall under services. So now here for land and building also, they are not talking about sale. They are talking about lease, tenancy, easement, license to occupy the land. If you are giving land on lease, if you are doing easement of lease, if you are giving license to occupy the land, how it will be treated, sir? Straightforward. It will be treated as supply of services. Similarly, any lease or letting out of a building, including a commercial, industrial, residential complex for business or commerce, that is also supply of service. If you are giving building on lease or if you are giving land on lease, they will always be treated as supply of services. Then this is important. Any treatment or process which is applied to another person's goods, it will always be treated as supply of services. Like they are mainly talking about job work. Let us say if I'm a person who is into printing, I'm into printing industry. I'm into business of cloth printing. One person, one manufacturer of shirts, he sent me the piece of cloth. On that piece of cloth, I'm required to do some printing and I'm required to send it back. So I'm doing some treatment or process on the goods belonging to another person. I'm doing a job work kind of activity where I'm performing some activity. I'm doing some process or treatment on goods belonging to others. So they asked us to treat always it as supply of services. So job work will always be treated as supply of services. Next, transfer of business assets. Sir, what is this transfer of business asset? This is having linkages with the registration, cancellation of registration and all. So here I will tell you only what is necessary. So what is it? Goods forming part of business asset are transferred or disposed by or under the directions of a person carrying on the business so as to no longer form part of those assets. It will be treated as supply of goods. Nothing but I have business asset. That business asset I am selling it. That business asset I am disposing it so that it will no longer form part of my business. How it will be treated as supply of goods. This you try to link it with schedule 1. In schedule 1 para number 1, I told that permanent transfer or disposal of a business asset, even without consideration, it will be treated as supply, no? So it is treated as supply. But will it be treated as supply of goods or supply of services? That answer you will get it here. It will be considered as supply of goods. So if you are goods forming part of business assets, there are some goods which are forming part of your business assets. Now that you are disposing it so that they no longer form part of your business assets. It will be treated as supply. If it is treated as supply, whether it will be considered as supply of goods or supply of services, it will be considered as supply of goods. Okay, next. Goods held or used for business are put to private use or made available to any person for use of any purpose other than business by or under the directions of the business person carrying on the business. That will be treated as supply of services. Sir, what is it? Let us say, for example, there is one company. So this company is having a car. This company is having a car. This car is the property of the company. But one day, one of its director came to the company and told, sir, on a weekend, I want to go with my family on a vacation. My car is in trouble. On weekend, anyhow, this car will not be used for any purposes in the company. I will do one thing. I will take this car on this weekend and I will use it for my family trip. In return, I will pay you some money. I'll pay to the company some money because I'm using the company car. No. So now it will be treated as supply of services. So what they say here, goods which are used for business, they are being put to private use or they are being made available to any person for use other than business purposes. So there are some business assets that either you are putting it for private use or you are giving it to another person who will use it for other than business purposes. That will be treated as supply of services. Next, last one. Goods forming part of business assets carried on by a person who ceases to be a taxable person are deemed to be supplied by him in the course or furtherance of business immediately before ceasing to be a taxable person. Sir, now what is it? It is having linkage with registration and ITC chapter. I will tell you in one simple logic, just that much you remember. Let us say, for example, I'm a registered person. Let us say I'm ceasing to be a taxable person. Let us say on 31st of December, I'm cancelling my registration. I'm no longer liable for registration, or I'm closing down my business. On 31st of December 2025, I'm closing down my business. I'm ceasing to be a taxable person. Now, one day before that, whatever stock and all is there left out. I'm not selling it. Let us say I'm closing down my business. I'm not selling it. Just like that, I'm leaving it. In my premises, some stock is there, some assets are there. I'm leaving it. If I sold it, anyhow, it will be treated as supply of goods. But let us say I'm not selling it. I'm leaving it as it is. Let us say at the time when I'm closing my business, I have some 10 assets, 10 small fixed assets are there. Some stock is there. This stock I am leaving. I'm not doing anything. Just like that, I'm leaving it. Now they say that even if you are not doing anything also, it will be deemed to be supplied. It will be deemed to be supplied and we will treat as supply of goods. On that, you will be liable to pay the amount of GST. Sir, I'm not doing anything, sir. I'm not selling, sir. I'm not disposing, sir. Just like that, I'm leaving at the premises and going, sir. But still the act says we will treat as supply and we will treat as supply of goods. On that also, we want you to pay the amount of GST, except two circumstances. Two exceptions are there. So in two exceptions, they will not be deemed to be supply. What are that exceptions? Business is going to be continued as a going concern. You are ceasing to be a taxable person. You are leaving that stock as it is, but that business is getting acquired as a going concern basis by another person. Another person is going to run your business as a going concern. If the another person is going to run your business as a going concern, he will use this asset, he will use that stock, and he will ultimately pay the GST. No. So the government it will be enough for the government if one person pays the GST. If you are closing the business and you are leaving the stock as it is, no one will pay GST. That's why they are saying it will be deemed as if you have supplied it and you pay the GST. But in case if the business is getting continued as a going concern by another person, we will collect the GST from him. You are not required to pay the GST. And one more exception, when the business is carried on by legal representatives. So let us say, for example, there is one person, that person has expired, that person died. So he ceases to be a taxable person. So whatever stock and all is there deemed to have been supplied. But in case this person is expired, but that business is carried on by their legal representatives, then also it will not be deemed to be supplied. No need to pay the GST on it. So these 2 points you have to remember. So generally, goods forming part of business asset who ceases to be a taxable person are deemed to be supplied by him. But two exceptions are there. What are they? Number one, business is transferred as a going concern. Number two, business is carried on by the legal representative. Understood? Next. One more category, renting, construction, etc. Under para number 5, they have listed out various activities which all will be treated as supply of services. They have identified a bunch of activities which will always be treated as supply of services. What are they? Number one, renting of immobile property. If immobile property is given on rent, it will always be treated as supply of service. Straightforward. Direct point. Next. Second one, construction of a complex building or civil structure. If you are providing construction services, then also it will be treated as supply of service. But for construction, here it is having linkage with schedule 3. Let me try to cover it. Let me try to cover it in a single go. Or else I will do one thing. I will link it along with schedule 3. For the time being now, you just remember that renting of immobile property, supply of service, construction services. Like for example, I have a piece of land. On that, a builder came forward and told, sir, I will do the construction for you on this building, on this piece of land. I will do the construction for you. So that construction of building is also a supply of service. But a thin line is there, a small connection is there with the schedule 3. When I take up 7 subsection 2, which activities will not fall under supply, there I will try to link it. Okay. So for the time being now, just remember that construction of a complex building or civil structure, if someone is offering that services, it will be a supply of service. Then temporary transfer or permitting use or enjoyment of any intellectual property right. Like you have a patent, you have a copyright, you have some goodwill. If you are temporarily transferring or permitting the use of that intellectual property, it will be treated as supply of services. Development, design, programming, customization, update, adoption, upgradation, enhancement, implementation of IT software. So either you are designing the IT software, developing the IT software, programming the software, customizing, the adoption, upgrading, enhancement, anything done with regard to the IT software, it will be treated as supply of services. Next, agreeing to do an obligation, agreeing to refrain from an act, or to tolerate an act, or to do an act. So now this is also one more thing important from the examination perspective. So if you are agreeing to do an act, if you are agreeing to do an act as a part of supply, let us say, for example, there is one factory, or let me put it this way, there is one builder. There is one builder. He got one piece of land. On that piece of land, he got the permission to construct 5 floors. He got the permission to construct 5 floors. Now, adjacent to that, there is already one building existing. Adjacent to that, there is already one 4 floors building which is existing. Now this builder has got the plan to construct 5 floors. This builder has agreed to, so I think I'm first giving the example for refrain from an act. Okay, let us take the example. So 4 floors, already existing building is there. Now this builder is having a vacant land. For that he got 5 floors of building permission. Now what happened is he can construct 5 floors. But this another residential community went to this builder and told, sir, you got the permission for 5 floors. You do one thing, don't construct 5 floors, sir. Construct 4 floors only. We are already having a blockage of the sunlight. So if you construct that extra floor also, it will be completely dark for us. Please don't construct that extra floor. Now why this builder will agree? Builder will not agree. No. Why? Because government gave him the permission to construct 5 floors. Who are you to come and restrict me to stop constructing one extra floor? So now this person is not agreeing. Now this building owners have told, sir, we'll do one thing. We'll give you 10 lakh rupees. In return for that 10 lakh rupees, you please don't construct that extra 1 floor. You don't construct that extra 1 floor. So now this builder has got 10 lakh rupees. In return, what service he has provided? In return, what supply he has made? He has agreed to refrain from an act. He has agreed to refrain from an act. He agreed not to do some act. What he agreed not to do? He agreed not to construct that extra floor for which you have received a consideration of 10 lakh rupees. Sir, will it be supply? Yes. Will it be supply of goods or supply of services? It will be supply of services. You made the supply of service by agreeing to refrain from an act, by agreeing to not construct an extra floor. You received a 10 lakh rupees. You are agreeing to refrain from an act. This will be treated as supply of services. This should be treated as supply of services. Or you are agreeing to do an act. Sir, what do you mean by agreeing to do an act? Let us say, for example, there is one factory which is doing manufacturing. So within the close proximity, there is one residential welfare association. There is one gated community is there. This factory is doing the manufacturing and also they are emitting the waste. Waste emission they are doing within the pollution norms only. Within the pollution limits only, they are releasing some waste gases into the air. But this residential welfare association is little worried. Okay, they are having permissions and all, but they are located near to that factory. Now, these people went to this factory and told, sir, you do one thing. You are releasing that waste from your factory, no? But before releasing it, do some treatment. You install some effluent treatment plant, treat the waste, then release it. Treat the waste and then release it so that hazardous gases will get eliminated. But this person will say, why I will do? Why I will do? I am releasing polluting, I am releasing all that thing, everything within limits only. Government is having the government has given me permission. Why I will install extra effluent treatment plant? So now this residential welfare association told, okay sir, we'll do one thing, we'll give you 5 lakh rupees. In return, you agree to install that effluent treatment plant. So here, this factory has got 5 lakh rupees. In return, what they are offering? They are agreeing to do an act. What they are doing? In return, they are agreeing to do an act. They agreed to do an act for which they are receiving the consideration. Will it be treated as supply? Yes. Will it be supply of goods or supply of services? It will be supply of services. Or even agreeing to tolerate an act. Let us say, for example, there is a jewelry store on a busy street. Inside of the busy street, instead of that store, there is a footpath. On that footpath, every evening, a pani puri wala is coming and placing his stall. So when this person is coming, so many people are gathering around him, and it is becoming a blockage for people to enter inside that store. Now, this jewelry store went to that pani puri wala and told, please remove your place from here because it is becoming an obstacle. My business is getting affected. Now, this person told, sir, please do tolerate. Please do tolerate. Monthly, I will give you certain amount. Every month, I will pay you certain figure. So you take, let us say, for example, every month I will pay you 20,000. In return for that 20,000, you please tolerate. I will keep my stall in front of your gate for some 3-4 hours. Please do tolerate it. For that, I will give you 20,000. So now this jewelry store, sorry, my pencil has run out of power. So this jewelry store is getting 20,000 every month. In return, what they are doing? In return, they are agreeing to tolerate. In return, they are agreeing to tolerate an act. So will that be supply, sir? Yes. What it will be? It will be supply of service. Okay. So agreeing to do an act, agreeing to refrain from an act, or agreeing to tolerate an act, all this will be considered as supply of services. But there is one circular associated with that. So agreeing to do an act, or agreeing to tolerate an act, or agreeing to refrain from an act, they will be treated as supply only when some conditions are fulfilled. Agreeing to do an act, agreeing to tolerate an act, or agreeing to refrain from an act, it will be considered as supply of service only when certain conditions are fulfilled. Sir, what are the conditions? Number 1, there should be an express or implied agreement or contract. There must be some agreement, either express or implied agreement, either to refrain from an act, or to tolerate an act, or to do an act. That means the person, whoever is doing it, should be under a contractual obligation. I'm not doing it voluntarily on my own. Because of some contract, I'm agreeing to do an act. Because of some contract, I'm agreeing to tolerate an act. Or because of some contract, I'm refraining from an act. So there must be either an explicit or implied agreement. And consideration must flow. There must be consideration. Then only it will qualify as supply of services. Understood, everyone? Clear and comfortable? So this is what regarding that 5E. And one more activity which will qualify as supply of services is transfer of right to use any goods for any purpose, whether or not for specified period, for cash, deferred payment, or other valuable consideration. If you are transferring right to use any goods, let us say, for example, I have a plant and machinery. That plant and machinery I'm giving on rent to another person for use. So that will be considered as supply of services. Understood? So this is what regarding para number 5. Then we have the next one, composite supplies. Sir, what is composite supply? We are about to see it in section number 8, but the government has identified few supplies in which supply of goods is also there, supply of services is also there. The government has identified few supplies in which there is supply of goods also, supply of services also. And the confusion is coming there, whether it should be treated as supply of goods or supply of services. The confusion is coming there. Government tried to sort out that confusion. First one is works contract. Sir, what is works contract? Works contract means is an activity in relation to an immovable property. Works contract means it is an activity in relation to an immovable property where supply of goods is also be there, supply of services also will be there. Let us say, for example, I have a building. On my building, I want to construct one extra floor. Now one builder came forward and told, sir, I will do that construction of extra floor. Material also I will only provide, labor also I will only provide. You pay me some 10 lakh rupees. I will bring all my material. I will only provide cement, sand, steel, everything. It's my responsibility. Along with that, I will construct that extra floor and give it to you. So this is an activity in relation to an immovable property. And as a part of that supply, I am receiving supply of goods also. I am receiving supply of services also. Now confusion will come. Let us say I am paying 10 lakh rupees. For that 10 lakh rupees, I am getting supply of goods also, supply of services also. How I should classify? So this confusion is coming, and department has clarified that always treated as supply of services only. Always treated as supply of service. Agreed, there is some goods also involved with that, but you always treat it as supply of services only. Similarly, restaurant services. Even if you go to the restaurant also, their service is also there, food is also there, goods are also there, service is also there. So here also a confusion is coming. In case of restaurant services, whether it will be treated as supply of goods or supply of services, the department has clarified always treated as supply of services only. Always treated as supply of services only, even though goods are involved. So this is what regarding whether an activity should be treated as supply of goods or it should be treated as supply of services. So with this, we have covered section 7, subsection 1A also. So our prime discussion is section number 7. In that we have covered section 7, subsection 1. which is saying which activities will be considered as supply. Then we have covered section 7 subsection 1a. Once an activity has been classified as supply, whether it will be treated as supply of goods or it will be treated as supply of services. Now comes section 7 subsection 2. Section 7 subsection 2, there are certain activities which will be neither considered as supply of goods, not even considered as supply of services. So there is section 7 subsection 2, which is negative list I call it. There are certain activities which will be neither considered as supply of goods, not even considered as supply of services. That means they are not treated as supply only. If they are not treated as supply only, there is no question of GST at all. So let us try to understand which are that lucky activities which will be neither considered as supply of goods, not even considered as supply of services. Those activities are given under schedule 3. Actually, the activities which will not be treated as supply are given at 3 places. One is schedule 3. Schedule 3 lists some activities which are not considered as supply. Thereafter, government has released a notification. By way of notification, they have specified certain activities which will not be treated as supply. And even government has given some circulars. By way of the circulars also, they have clarified some activities which will not be treated as supply. So first I will talk about schedule 3. As per schedule 3, which activities will not be considered as supply? First one, services by an employee to the employer in the course or in relation to the employment. See, you all are aware, different people, either your family, friends, whoever it is, they are all working with some companies as an employee, no? So as an employee, you provide services to your employer and every month you get some salary. You are making supply of services. Let us say, after my chartered accountancy, I joined a company for work. Every month I will work for them. Every month I will get a salary. I'm an employee. I'm providing services. Every month I'm getting 1 lakh rupees salary. Supply of services is there. There must be GST, no? There must be GST when supply of service. But have you ever heard that an employee, collecting the GST along with his salary? Hey, can I say to my employer 1 lakh rupees salary, 18% GST, paid to me 1,18,000? Did you ever hear this scenario? No. Why, sir? Why? Because that supply of services by an employee to the employer is neither considered supply of goods, not even considered supply of services. They are outside of the GST purview. The government doesn't want tax on it. So that's why they have told services provided by an employee to the employer is neither a supply of goods, not even supply of services. However, if you are providing something outside of your employment, whatever services you are providing under your employment, they are not treated as supply. But in case if you are trying to do something else beyond your contract of employment, then that will become supply of service. Let us say I'm an employee of some company. I'm getting monthly salary. My employer came to know that I also teach audit. He asked me, hey boss, why don't you teach my son also for his CA inter examinations? So I tried to offer coaching for his son, for which I am receiving some extra amount. Will that be considered supply of service? Yes, because this I am doing it outside of my employment. Understood? Clear and comfortable, everybody? And also a few more things I will try to explain it here. Very important for examination perspective. Payments made to an employee for not joining competing business. Not joining competing business. Let us say, for example, for my employee, I am paying some 1 lakh rupees so that he will not go and join my competitor. That is not the amount paid in the course of employment. That amount I am paying it for not joining another business that is outside of the course of employment. That will be treated as supply of service only. Similarly, if there is an independent director for whom sitting fees is paid, there is an independent director for whom you are paying a sitting fee, not salary. If you are paying sitting fee to the director, which is subjected to TDS under section 194J, that is also not a service in, that is also not a supply of service in course of employment. Independent directors for whom you pay sitting fees and all, that is not salary, that is their remuneration, professional fees, that also will be subjected to GST. However, if there is a managing director, whole-time director for whom you are paying for whom you are paying salary, for whom company is paying a salary, which is subjected to TDS under section 192, that is salary, that is outside of the GST purview. So you have to check when it comes to director's appointment, you have to check under which section TDS is getting deducted. If the TDS is getting deducted under section 194J, supply of service. If the TDS is getting deducted under section 192, it is not a service in the course of employment. It will be not subjected to GST. Able to understand? I think I told it in reverse. So once again, let me rephrase it. If the TDS is getting deducted under section 194J, not employment, GST will become applicable. If the TDS is getting deducted under section 192, it is in the course of employment, GST will not be there. Right. Next. Not just that, one more activity which will neither be considered as supply of goods, not even considered as supply of services is services by any court or tribunal. So if you want judgment, you approach a court. If you want, you approach a tribunal, and they will ask you to pay some nominal fees for the purpose of that court proceedings and all. So you will pay some fees to the court or tribunal for hearing your case. that is not considered as supply of goods, not even considered as supply of service. On that GST will not come. Similarly, functions performed by MPs, MLAs, members of municipalities and members of other local bodies, not a supply. Duties performed by person who holds any post in pursuance of the provisions of the Constitution in that capacity, like President of India, Vice President of India, Prime Minister of India, they are also holding the positions as per the Constitution. No, on that also GST will not be there. And duties performed by any person as a chairperson or member of director in any body established by central government, state government or local authority and who is not deemed as an employee. So similarly, if you are holding any position as a chairperson, as a director of any body established by central government or state government, that is also not treated as supply. Next activity which will not be treated as supply, services of funeral, burial, crematorium or mortuary including transportation of deceased. See, when the person is alive, from the day he is born till the time he is expired, you are harassing him by collecting GST. At least when he died, let him die in peace. So at the time, even after the person has expired, so there will be some crematorium services, there will be some burial services, there will be some mortuary services. This deceased person has to be transported. On that, government told we don't want GST on it. We have harassed you enough when you are alive. At least when you have expired, services related to funeral, burial, crematorium, mortuary, including transportation of deceased, on that we don't want GST. We don't want your curse even after you have expired. So that's why this activity will not read as supply. Then fifth point, so sale of land. If you are selling land, sale of land will be outside of the GST purview. When you are selling the land is not goods, but land can fall under services. So sale of land is not a supply. On sale of land, government don't want GST. Whereas, what about sale of building, sir? See, when it comes to sale of building, here we have to understand one concept. So in case of sale of building or sale of flat, what you have to do is, in case of sale of building, we have to determine first one cutoff date. I will tell you one simple system, remember it. In case of sale of building, whether it is not a supply or it is a supply, you have to decide it. Very important concept. In case of sale of land, no questions asked. Sale of land is not a supply. But when it comes to sale of building, there is some interpretation involved here. What is that interpretation? In case of sale of building, first you have to determine cutoff date. You have to determine one cutoff date. Sir, what is that cutoff date? Earlier of date of first occupation, or date of issuance of completion certificate. By competent authority. So in case of sale of building, you have to determine one cutoff date. Sir, what is that cutoff date? Earlier of two dates. Date of first occupation, date of issuance of completion certificate. Let us say date of first occupation is 20th of October. Date of issuance of completion certificate is 15th of October. Whichever is earlier. Which one is earlier? 15th of October, sorry. So that will become my cutoff date. So once you have determined the cutoff date, you need to check when the consideration is received. If the entire 100% of the consideration is received after the cutoff date, let us say entire consideration has been received on 25th of October, then it is not considered as supply at all. Not even supply of goods, not even supply of services outside of the GST purview. But in case, if you are receiving even a part of the consideration before the cutoff date, let us say total flat which I am purchasing it for 1 crore. Cutoff date, earlier of date of first occupation or date of issuance of completion of certificate is 15th of October. Let us say some 1 lakh rupees advance, I have paid it on 1st of September. The balance 99 lakh rupees I have paid it after the cutoff date. Now it will be considered as construction service. It will be considered as supply of service. Entire 1 CR will be considered as supply of service. On that GST will be applicable. Understood? Clear? Thumb rule. In case of sale of building, you have to follow one system. First, you determine cutoff date. How to determine cutoff date? Earlier of two dates. Date of first occupation, date of issuance of the completion certificate. You will determine cutoff date. Now you determine when the consideration is received. If the entire consideration is received after the cutoff date, after this cutoff date, it will not be treated as supply. Even if 1 rupee of consideration you have received it before the cutoff date, entire value will be considered as supply of service and GST will be applicable. Understood? So this you remember. This is what you will be able to find it here. This I have tried to summarize it in simple terms. And one more thing, when I say sale of land here, sale of land means not just open land, even sale of developed land is also not a supply. Thereafter, actionable claims other than specified actionable claims, which means I have told actionable claims will fall under goods definition. But all actionable claims will not be treated as supply. Only specified actionable claims will be treated as supply. Sir, what are that specified actionable claims? Betting, casino, gambling, horse racing, lottery, and online money gaming. Only these 6 specified actionable claims will be treated as supply. Apart from that, whatever other actionable claims we have, that will be neither considered as supply of goods, not even considered as supply of services. This list you have to remember. So tell me, what are specified actionable claims? What are specified actionable claims? They have specified 6 specified actionable claims. What are they? Betting, casino, gambling, horse racing, lottery, online money gaming. Repeat once again. Betting, casinos, gambling, horse racing, lottery, and online money gaming. Only these 6 actionable claims will be considered as supply. All other will be not a supply. Next. Now we have insurance related 2 points. Insurance related 2 points we have. So this insurance related 2 points I will try to tell you in one simple way. So one is apportionment of co-insurance. Let us say, for example, one company need insurance amounting to 1,000 crore rupees of insurance policy they want. They want a cover of 1,000 crore rupees of insurance. They want 1,000 crores of stock insurance. They approached one insurance company. Insurance company A, they have approached, sir, I need 1,000 crore rupees of insurance coverage. Now, insurance company A don't want to take that much risk. So what they have done is they have approached another insurance company B. So this insurance company A, I call them as lead insurance. This company I call them as co-insurer. So this company has approached insurance company A. They told, sir, I want 1,000 crore rupees of insurance coverage for my stock. But insurance company A doesn't want that much exposure. So they went to another insurance company. Hey boss, I do one thing. I will provide insurance coverage for 600 crores. You provide the insurance coverage for 400 crores. We both will collectively sell the policy. So this I call it as co-insurance agreements. Okay, this company told, okay sir, I need whatever you want to do. I want 1,000 crore rupees of insurance cover. Now insurance company A told, okay, not myself. We along with another co-insurer, insurance company B, we both will provide you insurance. Now for this they have charged insurance premium. Let us say some 10 crore rupees of insurance premium they are charging. 10 crore rupees of insurance premium they are charging. Now this amount will be actually collected by lead insurer. Whoever is leading that agreement, he will collect it. 10 crore rupees of insurance premium he has collected. On that 10 crore rupees, even GST also he will collect. 1.8 crore rupees of GST also he has collected. 11.8 crore rupees of total amount was collected by insurance company A. Now this insurance company A will retain 10 crore and balance 1.8 crore rupees they have to pay to the government. No, they have to pay to the government. Yes, they paid it. So now insurance company is having how much insurance premium? 10 crores they have. But 10 crores is not belonging to them. No, because they have involved other insurer also, co-insurer. Now out of this 10 crore rupees, 6 crore rupees they will keep, 4 crore rupees they have to give it to the co-insurer. Because both of them collectively have offered to offer the insurance policy. No. So this lead insurer collected 10 crore rupees, but they can't keep entire 10 crore. They have to keep 6 crore rupees. Balance of 4 crore rupees they have to remit it to co-insurer. So now what they are telling is whatever 4 crore rupees they have remitted, the apportionment of premium between lead insurer and co-insurer. This lead insurer is apportioning 4 crore amount of insurance premium to co-insurance. No, this will be neither considered as supply of goods, not even considered as supply of services. On that GST will not come. On that apportionment GST will not come. The logic is very simple. This 4 crores is a part of 10 crores only. On the 10 crores, anyhow, entire 1.8 CR GST is already paid to the government. So it is just a sharing. 4 crores is just a sharing. So once again, if they start asking the GST on this 4 crore rupees also, it will be double taxation. Why? Because this 4 crores is a part of 10 crores only, on which lead insurer has already paid the full amount of GST to the government. Understood? So simply, if I have to put it, very simply, if I have to put it, this is very much I have made it as simple as I could. This alone, this one, each point, this insurance related point, each point I can explain it for half an hour, but we can't afford that much amount of time. I try to make it as simple as possible. So if you read it here, activity of apportionment of co-insurance premium by lead insurer to the co-insurer for insurance services jointly supplied by both of them in co-insurance agreements, subject to the condition that lead insurance pays the GST on the total premium. That's what even example I have given you here. So if this lead insurer has already paid the GST on the total insurance premium, whatever he is sharing with the co-insurer, on that once again it will not be treated as supply. On that once again GST will not come. Similarly, in case of reinsurance agreement also, listen carefully. Reinsurance agreement also, it will happen. Let us say there is an I will take the names actually. Let us say Max Insurance is there. Max Insurance is there. They sold a insurance policy amounting to 1000 crore rupees. They sold a insurance policy amounting to 1000 crore rupees to one company, for which they received some 10 crore rupees of premium they have received. Now, after they have on the 10 crore rupees, even 1.8 CR GST they have collected, total 11.8 CR GST they have collected, and this amount 1.8 CR they have paid it to the government also. Now, after they have sold the policy, they want to reinsure it. They want to reinsure it. In the previous case, it was co-insurance, but here it is reinsurance. Reinsurance means you want to transfer the risk. So after you have sold the policy, now you approached another insurance company. Let us say, for example, you approached ICICI Insurance for the purpose of reinsurance. Sir, we have already sold a policy. We want you to reinsure it. Let us say, for example, half of it we want to reinsure. They told, okay, boss, we will do the reinsurance. We will do reinsurance. But for that, let us say they are saying we want 5 crore rupees of consideration. Reinsurance. It is altogether different agreement. So they have got 5 CR in return for reinsurance services. They have paid reinsurance services for 5 crore rupees of premium. Now, along with that 5 crore rupees, they will also collect GST. They have to collect it on reinsurance. Reinsurance is a separate agreement. On this 5 CR, they have also collected 18% of GST because they are providing reinsurance services for a consideration. So along with this 5 crore rupees, 18% GST also they have collected. 5.9 CR GST also they have collected. Now, ICICI Insurance will pay that 0.9 CR, 90 lakhs to the government as GST. Now, here one more thing will happen. See, Max Insurance customer, they have initially purchased a policy. Now they are finding the customer and giving it to ICICI Insurance. No. Initially what happened? Max Insurance found the customer, sold the insurance policy. Thereafter, they are getting it reinsured with ICICI. That means they are giving business to ICICI Insurance, for which they will get something called receding commission or ceding commission. Some commission they will get it. So that commission will be actually from this 5 crore. They required to pay 5 crores for reinsurance. No, from that, let us say 10%. So 50 lakh rupees, they will get it as commission because they are giving business to them. No. So that 50 lakh rupees, they will get it as commission. Now they are saying that this ceding commission will not be treated as supply. This ceding commission will not be treated as supply. Why? Because the logic is very simple. This 50 lakh rupees of ceding commission is from the amount of reinsurance premium, which has already been subjected to GST. This 50 lakh rupees ceding commission, they are getting it from a total premium of reinsurance premium of 5 crore rupees, on which 5 crores they have already paid GST amounting to 0.9 CR. No. So this ceding commission is a part of that reinsurance premium only. No. So that's why on that ceding commission, once again, there will be no GST. Once again, there will be no GST. So two things here: apportionment of insurance premium between lead insurer and co-insurer, not a supply. Similarly, ceding commission charged by the person from the reinsurer, that is also not a supply. So if you read it here, services by insurer to reinsurer, for which ceding commission or reinsurance commission is deducted from the reinsurance premium paid by insurer to the reinsurer, subject to condition that central tax, state tax, union territory tax is paid on the gross reinsurance premium. So on this entire gross reinsurance premium, anyhow you are paying GST. The ceding commission is a part of that reinsurance premium only, which has already been subjected to GST. If you once again start imposing GST on that ceding commission, it will lead to double taxation. Okay, clear? Right. So these two are little complicated. In our regular class, we have understood in a detailed manner. So here we can't go beyond this. Right. Then, so these are the activities which are not considered as supply by way of Schedule 3. There are few more activities which are notified by way of notification, which will not be deemed as supply. Sir, what are they? Activity in relation to municipality or panchayat functions. So if you take municipality or panchayat, they have various functions which are entrusted to them under Article 243G or Article 243W of the Constitution. Municipality or panchayat, they perform various functions which are entrusted to them under Article 243G or 243W of the Constitution. Now that the notification, this says that, see, this panchayat or municipality, whatever activities they are performing under Article 243G and W of the Constitution, they will be neither considered as supply of goods, not even considered as supply of services. Let us say, for example, municipalities are required to maintain street lights. So they will collect some consideration for that, maybe. So now, since that activity is assigned to them under Article 243W of the Constitution, they will not be liable to pay GST on it. It will be considered as not a supply. Similarly, grant of alcoholic liquor license. Today, if I want to open a bar where I want to sell alcoholic liquor for human consumption, I need to get a license from state government. If I pay a certain amount of money, state government will give me license. Now they say that the license provided by the state government for grant of license for alcoholic liquor for human consumption, that is also not treated as supply. On that license provided by state government also there will be no GST. But here you have to be very careful. Only what they say here, only grant of license for alcoholic liquor for human consumption. If they are granting other licenses like telecom licenses or mining licenses, on that will be treated as supply, on that GST will come. Only thing is, only grant of alcoholic liquor license is only not treated as supply. Other licenses will be taxable. Other licenses will be treated as supply. Now, we'll try to understand a few activities which will not be treated as supply and which have been given by way of circular. So what are that activities? I will try to tell you in one simple way. Let us say, for example, there is one logistics company. There is one logistics company. Let us say this logistics company, VRL Logistics is there. They are having an office in Chennai. They are also having an office in Bangalore. Since they are having a place of business in multiple states, they will get separate registration. This they have registered with Tamil Nadu state government. This they have registered with Karnataka state government. Okay. So now when they have registered, let us say, for example, every day they are required to transport some goods. There is a truck here. So now in this goods, the truck, the goods will be loaded. Now this truck will go from Chennai. It will go to the Bangalore office. There all these goods will be delivered. Thereafter it will be dispatched to their customers. So every day the truck is going from Chennai office of VRL Logistics to Bangalore office of VRL Logistics. But both are registrations of same person. So they both will be treated as distinct persons under section number 25. Just now we have seen they both will be treated as distinct person. Now what one interesting officer has done is, what one PO has told us, hey, you both are treated as distinct person. You are making supply of truck. Every day the truck is going between distinct persons without any consideration. So now what this PO has done, he determined the value of the truck. And he told that, see, this entire value of the truck is a supply of goods between distinct persons under section number 25 without consideration on the entire value of the truck. I will treat as supply under section 7 subsection 1 clause C read with para number 2 schedule 1, supply between distinct persons even without consideration on the entire value of the truck. He slapped the amount of GST. Interesting interpretation, very intelligent proper officer, but this is purely harassment. So that's what even the circular has also clarified. Movement of conveyance like trains, buses or any other kind of conveyance between distinct persons for the purpose of transportation of passengers or for the purpose of transportation of goods or for the purpose of getting the repairs, that you don't treat it as supply. It is unnecessary harassment unless you are making a further supply of it. So what do you mean by unless you are making a further supply? Let us take Ashok Leyland. Ashok Leyland manufacturing factory is there. In the factory they have manufactured some 10 Ashok Leyland buses or lorries, whatever it is. From there they have taken it to the depot, sales depot. Let us say manufacturing unit is there in Gujarat, sales unit is there in Delhi. So now some 10 trucks are moved from manufacturing factory to the depot for the purpose of making further supply. So here you determine value of the goods because your truck will become goods here. Here you determine that value of the 10 trucks that you treat as supply under para number 2 of schedule 1, supply between distinct persons under section number 25. Why? Because here conveyance is getting transferred with the intention of making further supply. Then you treat it as supply. But in case if the conveyance is getting moved for the purpose of transportation of passengers, for the purpose of transportation of goods or for getting the repairs done, then you don't determine that value of the conveyance as supply. Don't do it. Okay. Similarly, one more circular also they have given. Let us say I'm a builder. I'm doing one construction. I have my office in Karnataka. I also do some constructions in Chennai. Now I have one truck. I have one JCB. Let us say I have a JCB. Now this JCB I was using at one site in Karnataka. Now this JCB I have to move it to Chennai because there I have to use it. Now I have to take this JCB and I have to use it at another place. At Chennai I have to use it. Now I am registered in both the states. both are distinct person. Now here also PO has done interesting interpretation and told, hey, you both are distinct persons under section number 25. JCB is goods. You are causing the movement of the goods between now. You are making a supply of goods between distinct person. He determined the value of the JCB and he told that I will treat as supply even without consideration. On that you pay GST. Harassment, no. So now what they have told us, whatever explanation they have given in this circular, the same thing will become applicable here also. So when wheels on truck, or they use some phrase here. So if you see it, yeah, interstate movement of rigs, tools and spares and all goods on wheels, when you are moving it for the purpose of repairs or etc., then you don't treat as supply. Don't unnecessarily do the harassment. Understood? Clear? Right. So then we have one more thing here. One more clarification regarding vouchers is there. This clarification regarding vouchers, I will tell you at a later point of time. This clarification regarding vouchers, I will tell you at the time of supply. When I take up the time of supply, there I will teach you about this circular vouchers. Very important circular. We will talk about it later. Right. So these are the activities which will not be treated as supply. So we have seen a few activities under schedule 3. We have also seen few activities under notification. We have also seen few activities under circular which will not be treated as supply. So with this, we are putting an end to section number 7. Now we will try to understand section number 8. One more small section we have. Section number 8 we will try to understand. With that, supply under GST will come to an end. Supply chapter will come to an end. So what is section number 8? Section number 8 is going to talk about composite supply and mixed supply. Section number 8 is going to talk about composite supply and mixed supply. Let us try to understand what is the concept of this composite supply, what is the concept of this mixed supply, and how to determine its taxability. Everything we'll try to cover. First of all, I will talk about composite supply. Sir, what is composite supply? What is composite supply? See, sometimes what will happen is you get a bundle of supplies for a single price. You get a bundle as a package. You get a combination of goods or services, sometimes combination of services, sometimes combination of goods and services for a single price. You are going to get it. Let me give you one example. You go and take the hotel accommodation. You go and stay in a hotel. Now, along with that hotel stay, they provide various other services. Let us say, for example, complimentary breakfast will be there. Complimentary breakfast will be there. Along with that, they will also provide laundry services. Along with that, they will also provide airport pickup and drop. Airport pickup and drop. So this bundle of services is getting offered to you. Let us say, for example, you paid some 10,000 rupees. For that 10,000, you are going to get the hotel accommodation also. You are going to get the complimentary breakfast also. You are going to get the laundry services also. Airport pickup and drop also you are getting. So now for a single price, you are going to get a combination. When more than two or more taxable supplies, are getting provided, then we call it as composite supply. You're paying 10,000, but you are getting this much combination. Now, how to treat it? This is a taxable supply. On this, GST is required to be paid. But how to treat this 10,000 rupees, sir? Should it be treated as hotel accommodation services? Should it be treated as for complimentary breakfast? Should it be treated as for laundry? Or should it be treated as for airport pickup? Or do I need to bifurcate it? So that depends on whether it will become a composite supply or mixed supply. So if you are getting a combination of supplies in a single transaction, how to determine the taxability? That depends on whether that combination is falling under composite supply or mixed supply. So when it will fall under composite supply is, if all that supplies are naturally bundled. If all that supplies are naturally bundled, then we will treat them as composite supply. Sir, what do you mean by naturally bundled? When we can take them as naturally bundled is, let us say, for example, out of the combination of supplies which I am getting, one is principal supply, one is main supply, other one is ancillary supply. One is main supply, other one is ancillary supply. So you tell me, in this entire combination, is there anything which is principal supply? Is there one thing which is main supply? Yes. What is the main supply? Hotel accommodation is main supply. This complimentary breakfast, laundry, airport pickup and drop, these are all ancillary. To make my main supply more enjoyable, I am getting ancillary services. Okay. Or everybody in the market is doing it. Let us say, for example, not just this supplier, everybody in the market is doing it. Or as a customer will always expect these services as a package. Generally, when I want to go and stay in a hotel, I want everything as a package. I want hotel accommodation, I want complimentary breakfast, I want laundry, I want airport pickup and drop. So like that, a few conditions will be checked. Like, is one thing is a main supply, other is ancillary supply, is everybody in the market is doing it, or recipient generally expects it as a package. So like that, I will do some testing, and depending on that, if I have classified that, yes, these are all naturally bundled. These are all naturally bundled. Then I will treat it as composite supply. And once an activity I treat as composite supply, entire value will be treated only for principal supply. So here I have got 10,000 rupees now. This 10,000 rupees will be deemed for only hotel accommodation. So whatever rate of GST which is applicable for hotel accommodation, let us say this hotel accommodation will attract 18% of GST, entire 10,000 will be treated as a consideration for making hotel accommodation only, and entire 10,000 will attract the GST at the rate of 18%. Able to understand? Clear and comfortable? So when you are getting two or more taxable supplies as a combination, you need to determine first whether it is naturally bundled or artificially bundled. If it is naturally bundled, it will be composite supply. It will be treated as supply of the principal supply. Whatever is the principal supply, that entire value will be treated as principal supply only. And whatever rate of GST that is applicable for principal supply, entire value will attract the GST at that rate only. So here entire 18% will GST will entire 10,000 will attract GST at the rate of 18%. Now sometimes the supplies will be not naturally bundled. So one common example which I often use, let us say for example, Cadbury is selling a Diwali pack. In that Diwali pack, 4 compartments are there. In one compartment they have kept chocolates, in one compartment they have kept sweets, in one compartment they have kept crackers, and in one compartment they have kept dry fruits. And this package they are selling it for 2,000 rupees. Now for this 2,000 rupees you are getting a combination. You are getting a combination of different supplies. Chocolates will attract, let us say, 5% GST. Sweets will attract 18% GST. Dry fruits will attract, let us say, 28% GST. Crackers will attract, let us say, some 12% GST. So like that, for single price, you are getting multiple supplies which are not naturally bundled. You tell me, out of all this, what is a principal supply? Can you say something is a principal supply here? Is chocolates a principal supply? Is sweets a principal supply? Is crackers a principal supply? Is dry fruits a principal supply? We are not able to determine it. So that means every supply is having its own prominence. Nothing is principal supply here. So this we call it as mixed supply. If you classify this supply, if you classify this combination as a mixed supply, then what will happen is this entire value will be treated as that supply which is having highest rate of GST. So what is which product is having highest rate of GST? Dry fruits is having highest rate of GST of 28%. This entire 2,000 rupees will be deemed to be the supply of dry fruits only, and highest rate of GST 28% will become applicable on the entire value of 2,000 rupees. Able to understand? Clear? So very simple here. Composite supply, principal supply, it will be treated as supply of principal supply. Whatever rate that is applicable for a principal supply, entire value will attract that rate only. In case of mixed supply, which are not naturally bundled, it will be treated as supply of that product which attract, or that service which attract highest rate of GST. Entire value will be subjected to GST at that applicable rate only. Okay, next. Sometimes what will happen is we get certain kind of activities where it is neither a composite supply nor a mixed supply, where a complete breakup is given. Let us say, for example, you took your car for service. So now when you took your car for service, you will get a bill. In that bill, it was written, for example, some part is replaced, headlight is replaced, amount is 10,000, rate of GST is 18%. Then some engine part is replaced, amount is 5,000, rate is 5%. After all that, service charges are 2,000 rupees, GST rate is 18%. So like this, sometimes what will happen is they are not naturally bundled, and also individual rates are separately bifurcated. Individual component prices are separately bifurcated. Then it is neither a composite supply nor mixed supply. What you do is, since you break up, you clearly have it on the invoice, calculate the GST amount appropriately, which means for this 10,000 rupees of headlight, amount of GST will be 1,800. For this 5,000 rupees, amount of GST will be 2,500. For this 2,000 service charges, amount of GST will be 360. Like that, separately you can calculate it. Understood? Clear and comfortable, everybody? So this is what regarding composite and mixed supply. So with this, we have completed section number 7 as well as section number 8, supply under GST. We are successfully done with. So we took more time for supply than what has been estimated. No issues. So today we'll wind up our revision with this. We have done only 2 chapters, introduction and supply we are done. Tomorrow we'll start with the registration, charge of GST, all that we will try to do it from the next session. So that's all for today, guys. See you tomorrow once again live.